Ladies and gentlemen, hello, is this, I guess the first thing everyone needs to say, is this thing on? It isn't, or is it? Do I need to turn it up? Just, oh, right.
Which number do you have? Number 2.
Yeah.
Is it on? I don't think it is.
It's supposed to be.
No, this one is muted, but that shouldn't make a difference.
No.
Okay. Is it too low?
I guess it is. Hello? There you go. It was on. I was just way too low. So, hello everyone and welcome. My name is Anders. I am a radio presenter and I work just across the street at the Danish Broadcast Corporation. I have the honor of being the moderator at today's Blockchain Summit event. Other people, amongst them yourselves, I guess will be the brains of the operation, and I'll try to be the voice of the operation. That is the extent to which I am capable of working. I'll have a few housekeeping notes, but I think I'll let Roman, as one of the event's arrangers, say a few words to begin with, and then I'll take over from there. There you go, Roman.
Thanks a lot, Anders. That was a great introduction. Welcome, everybody. I'm Roman. I'm a head of section of the information management section here at ITU, and I'm one of the organizers of this event. It's great to have so many people here today. When we started discussing this kind of 6-7 months ago, the plan was to have a small PhD event, 5 PhD students, 6 PhD students sitting somewhere together, talking about blockchain and trying to figure out how we can do this from a research point of view. Then very soon we talked to colleagues from Unmade, and they said, if you are going to do something like that, we are supporting you, right? Let's make an event out of that. So, and from that point on, it started to grow, right? We thought we should make it not just a fintech blockchain in finance event, Because blockchain is so much more, and it's discussed in many other areas as well. So we wanted to have other industries joining us. And we were so happy and glad that we were able to get Mask and Nordea and SCET as partners for the summer school. The summer school was held kind of just in front of this event the last couple of days. We had over 30 students, participants from all over Europe working on blockchain use cases, 6 altogether, and they had to develop prototypes in the last 24 hours in a hackathon. And later today we will see 3 of them, and then you have the chance to vote which one is actually working best for you. I don't want to take too much time away from this event and from the speakers, but once again, I want to make sure that I kind of say thank you to all the partners and kind of institutions which helped us, and I will go through this in a hopefully organized way. This is an event which is kind of co-organized by ITU, Copenhagen Business School, and Copenhagen University. So the 3 universities aligned forces to put this thing together, which was in itself, I think, a great achievement. In addition, we enjoyed a strong support from industry partners, as already mentioned, Mask, Nordea, and SCET. They opened their portfolio, their project ideas, what they are doing, what their interests are in the blockchain area. So we worked with them together on use cases so that we had something actually to work on together with the students the last couple of days. And the whole event would not have been made possible with the great financial support also of our sponsors. First of all, the platinum sponsor Unmade, that was kind of a #1 kind of bank, otherwise that would not be possible. But we are also kind of enjoying strong support from our gold sponsors, which is IBM, which is NER, and which is Reply. In addition, the blockchain hackathon was facilitated by BrainBot, kind of a lot of colleagues which are also closely related to Ethereum directly. So, if you will, we were able to tap from the source knowledge for this hackathon. Without any further delay, I would kind of like to hand over, because Anna's voice is much nicer to listen to than my voice. And I hope you will enjoy the event, and if there's anything else you would like to talk about afterwards, I'm pretty sure everybody here from the Blockchain Summer School is happy to talk to you. Thanks, and thank you for being with us today.
Thank you. Thanks very much, and also for those kind words. I have a few introductory comments. As I mentioned, I'm no blockchain expert myself, but I follow what's going on as best I can. And yesterday I came on a tweet about blockchain, which was from David Birch, who some of you may know, who's expert in currency and digital payments, and he had responded. He's also a bit of a joker, I should add. Someone had tweeted a picture of an app where you could get people to pray for you, which I thought was an interesting combination of technology and faith. Someone suggested that you should pay for that in Bitcoin, and David replied, "The first church of blockchain is born. I have seen the light. I am hashed again." So thanks to David Birch for for lightening the mood and setting up this event. But of course, blockchain is not entirely a joke. Some would say it is, but I would say it is certainly not. And to further that point, we have today, apart from the students, of course, and the guests, we have 4 great speakers. We have a panel, and of course, the presentation of the use cases and the prototypes in the student projects. And there will be time for a few questions during just after each of the presentations and the talks. And I guess if there are longer comments or topics for deeper discussion, we'll try to keep that to afterwards, so we can keep the schedule for today. Also, I think we're live streaming to the entire interwebs, and I just wanted to say hello to the entire world and all of you out there. You may be able to tweet questions to the panel and the presenters, and we'll try to incorporate that if we have time. But then again, without no further ado from me, I'd like to welcome our first speaker today, Vinay Gupta, who's an expert in resilience and risk, and also the man behind Hexayard, a fantastic concept of doing low-cost housing, I guess. And also, he has just announced to me that he has started a venture capital project. And it's so new that it still hasn't really got a name, so we'll call it Hexayard Capital. Okay, and I think you'll be using the Blackboard, which is fantastic in and of itself, because, and while he gets the microphone, I'll just let you know that I think that is a fantastic combination of high-tech, digital. We're streaming, we're tweeting, I'm babbling on to pass the time, and then we have Vinay, who's an expert in blockchain, and he'll be using the Blackboard. So that's sort of the whole spectrum in one scene. But Vinay, I hope your microphone is on, and I'll...
Am I on? Yep, great.
Okay.
Ready to roll.
Fantastic. Give Vinay a hand.
So first I should probably ask a question. What is the hashtag for today? Do we have a hashtag? Ah, great, fantastic, good. So, it's a long-ass hashtag. So, what I'm going to talk about is basically just one graph, which is this. Right? Bottom axis, we have time. Top axis, we have state of the world, state conditions. So, take this as being a 20-year timeline, and this is our kind of destination mark, right? In 20 years, we know with very little doubt that computers will be built into eyeglasses or contact lenses. Universal high bandwidth availability will be everywhere. You'll be able to navigate inside of buildings and find objects using some kind of location service. Cryptographic technologies descended from blockchains will be as ubiquitous as SQL databases, and so on. You can make a set of predictions that are actually conservative because they're extrapolations of current trends, and there's very little doubt that that stuff will happen. Now, there are a bunch of scenarios which are completely unpredictable and unknown, and they're kind of all over here, 20 years of life extension, discovery of life on Mars. There's all kinds of stuff that is unpredictable, but there are a certain set of linear extrapolated trends which are very, very, very easy to predict. And everybody in their head sort of thinks that the progress towards these goals will look like that, and in your mind, you sort of have this notion of incremental steps. A good example of this is the operating system kind of personal computer market, where between 1984 with the IBM PC running MS-DOS and 2004, where you basically get the death of the desktop and the birth of the laptop and then the phone, the progress in that period is linear, or if anything, a little below linear. Because of the kind of monopoly that Microsoft has, the progress towards the goal is actually kind of slow, and then it takes the rebirth of Apple to really produce the acceleration of utility. And what you have is this space where essentially the Microsoft tax slowed up progress really surprisingly, although once you kind of got to the endpoint destination, everything wound up more or less where you would have predicted if you'd started in 84 to guess 20 years forward. Similarly, there are other areas, and I think that virtual reality is another thing which is kind of on a curve like this, simply because it turned out to be way harder to do VR than anybody had expected. On the other hand, there are other technologies where you get off to a roaring start and the whole thing goes much faster than expected. You just kind of take off like this and woof, off you go along. And I would point to self-driving cars as being something which is on basically this trajectory. I think most people expected self-driving cars to take 10, 15, 20 years, and instead we have this enormous acceleration, which is partly produced by a bunch of visionaries with enormous amounts of capital, and partly produced by the fact that the self-driving car problem turned out to be more tractable than people expected. So the stuff up here is kind of ahead of curve, and the stuff down here is behind curve. And the case that I want to make is that there is a very good chance that blockchain will turn out to be way ahead of curve in Scandinavia and way behind curve in America. I think that you're in a situation where the regulatory environment, the business environment, and the culture in America are actually quite against the core principles of blockchain. And I think in Scandinavia, they're quite for the core principles of blockchain. And I think there are two key areas. The first is that American regulators are really, really, really paranoid about cryptography. They fought the crypto wars of the 1990s. They've had this entire punch-up with Snowden, Assange, WikiLeaks, all the rest of this kind of stuff. They're in quite a hard-line, right-wing, expansionist kind of gear right now. And it seems likely that the outcome of the next US election will push them even further in that direction. So it wouldn't surprise me at all if we saw hard follow-up on President Obama's statements at South by Southwest that you couldn't have a Swiss bank account in everybody's pocket because it would eventually make things like tax enforcement difficult. When the most powerful man in the world says something like that, you understand that you're going to have a problem operating in his turf. Similarly, right, if you look at Scandinavia, you have relatively open taxation records, you have a very open society, you've got relatively low inequality, and you're practically cashless. Right? Some countries a little more, some countries a little less, but that general set of trends are a very, very good fit for distributed ledger technology. You've already got most of the cultural infrastructure that you would need, plus you have small country advantage, which is that right now probably 2/3 or 80% of the people that will make fundamental decisions about how blockchains intersect with your society are sitting right inside of this room, right? Everybody's here, you can make a deal over coffee that will have all of the necessary people in the room to actually get something done in 6 months. In America, because you have Washington, D.C. for government, New York for finance, and San Francisco for technology, getting a meeting requires somebody to get on a plane for 5 hours, and you have to schedule it 2 years in advance. So never underestimate the degree to which small country advantage and having the right social fit for the technology can put you up here, while, unfortunately, I think you're going to see Silicon Valley is kind of mired down here, and the size of that gap between, kind of future forward and future backward, ahead of curve and behind curve, could be the same as 5 or even 10 years of relatively slow linear progress. Right? If you think of something like Uber, in the places where Uber immediately gets the necessary licensing to go forward with self-driving cars, you get one reality. In the countries which refuse to license self-driving cars because they don't think they're safe and they crack down on Uber with a hammer, you get another reality. And the gap is extremely large and generates enormous amounts of commercial pressure. So that is the one idea that I wanted to start with. And then the half of an idea is this. Getting from these kind of scenarios to these kind of scenarios is largely about ensuring that you don't wind up with parasitic monopolies. Right? If you have, open source software, free exchange of ideas, innovation, no heavy revolving door between industry and government in a way that helps create monopolies, if you have a genuinely competitive arena for ideas and a competitive market, the tendency to be behind the curve is greatly reduced. So if you could create an environment in which you have a genuine diversity of projects and a lot of trade in ideas between different countries, between different perspectives, between different industries, if you could keep the pot moving and keep everything stirred properly, you maximize on the advantages. And this is the area where being a small country becomes a disadvantage, because the tendency is to pick a local winner. Right? Everybody agrees that the fundamental output of Iceland, their major export, is Björk. Right? A generation later, it becomes Sigur Rós, one country, one band. Right? And you want to very much avoid this kind of thinking, because the tendency is to pick a local winner and then figure out how to export it. And so my suggestion is that as you go forward, attempting to get up onto this curve and staying there, try and avoid the problem of having a single local monopoly which becomes a de facto partner of government and then just rolls out everywhere. Because when that works, it's fantastic, but when it fails, it locks you down here, and everybody that tries to make the jump back up onto the fast path high road winds up hampered because there's a lot of implicit regulatory pressure not to do that. So you have to basically, take advantage of the advantages you have, really play to those, but the weakness that you have to guard against is implicit natural monopoly because of regulatory, partnering. I don't really know what the word for it is. So that is basically all I had to say. Thank you.
put this on. I think we have time for one or two questions, if that's okay, Vinay?
Cool.
Okay, so if there's anyone in the audience who would like to make them and the rest of us smarter by getting a question in for Vinay, now's the time. Right, we have one on the fourth row, if you could please. Thank you.
Baseball hat. Was it him?
We have a microphone here, so it'll be with you in 30 seconds. 10 seconds, 5, and there you go.
Ding.
How big do you think that the difference between the European countries will be? Do you see them as collaborating together, or do you see them as, for instance, London becoming a fintech hub and then everyone else trying to steal off their success? Will we have the same regulation, or will it be very, very vastly different in countries?
So UK government, the question was, are we going to see the same regulation everywhere, or will it be different from country to country? UK government is just in the process of standing up a thing called a Challenger Business Programme, which is UK Department of Business Innovation, Skills, a couple of other things, and industrial policy, great name, industrial strategy even. Is standing up this project, which is basically about trying to make the UK the best place in the world to put blockchain projects. And they have a really comprehensive list of areas where they want government to change regulation, where they want to stand up new structures inside of government. And they're really looking at this as being a core opportunity to give the City of London some kind of entry into the 21st century in a way that takes its enormous skill and finesse in regulation and in management of systems in a pre-regulation state. You know, their ability to do good, square deals and fair business in a situation where it's not really clear what good practice is yet. And they want to really try and build out a platform on top of that. Whether they will be able to get that done or not is probably going to define whether the City of London becomes kind of the San Francisco of blockchains. You know, whether we wind up with, you know, that kind of central hub there, or whether we're just one player in many other players in the European theatre, with everybody having their own particular area of specialisation. So I think London definitely is batting first, and if we hit the ball square on, you're all going to be playing catch up with London, and if we miss the swing, then we wind up with a kind of pan-European response, but it will be 5 years slower, because generally speaking, getting stuff done at the European level is slow, the coordination activity is expensive, and in that scenario, we have to hope that you get enough advantages from the cultural diversity of Europe and the ability to do things like jurisdictional separation of capability that you get, you know, back onto the fast track. And this is very much thinking about Europe. I think Scandinavia is in a very different position because the countries are small enough and because the culture is dramatically different in the areas of personal openness and transparency. So even if the Europeans, you know, basically bolt all this stuff onto their data protection law and go off in that direction, it doesn't mean that Scandinavia doesn't get to take a decisive grab of one part of that space, for example, by going cashless first and then moving a whole bunch of government functions onto blockchains like registers, you know, driving licenses and all the rest of this kind of stuff. If you stand up all of that infrastructure now, it gives you the same kind of head start that, for example, the Estonians have because they stood up digital signature infrastructure.
Of course, we do know what will happen if the British companies in London gets ahead. They will simply vote for a Bloxit and do a fork of their take on things. Yes, I'll be here all day. And that was the last of my blockchain jokes, I'm sure. You wish.
Well, you know, they have talked a lot about Lexit. That if Britain leaves, if England leaves the EU, London might then vote to remain.
Yeah, they might. Yeah. One brief question, yes. We have time for one brief question.
Yeah, thanks for bringing back the curve of hype. Many of the things that we were talking about, virtual reality, cloud computing, wearables, all that stuff, it was on the curve of hype 20 years ago, but it wasn't enough critical mass before the industry, you know, there's enough customers, would they buy it at that price, whatever, you know, was it small enough, smart enough? Where are we now on the blockchain? Are you saying that we're actually there, or is it 5 years from now, or is it just on the curve of hype?
Okay. Does everybody know a thing called Rogers' diffusion of innovation curve? Could I have a quick show of hands? Okay, let me very quickly run this thing over. So you have a kind of bell curve in society, and the Rogers folks divide it up into a bunch of zones. 2% early adopters, early majority, whatever it is, mumble, late majority, something or other, laggards. I can't remember what they're called. But the basic idea is it divides into a set of sections, all of which have slightly different motivations and relationships with technology. So by the time you get to late majority, people that hate technology have to use your stuff or they can't go to work, And that's the stage where it becomes super important to have great customer service, and it's about support, and the technology gets really simple to use, and everybody kind of agrees that it sucks, but it's a standard, and off you go with the races, right? So, and then you get to kind of late majority, the sort of very, very late majority. I think it's called laggards, and at that point, it's like buying printer ink in the supermarket, and it's right there beside the cornflakes. It's completely ubiquitous, end of story. So, if you go on that sort of model, right now, how many Bitcoin users really are there? 100,000? 2 or 3 million? Something in that kind of range. So it's at the level of being about 1% of global population. It might, 10th of a percent of global population, it might be 1% of the internet population. So it's very clearly right just about in the early stages of early adopter, right? Then you get things like Brave, which is a web browser with a Bitcoin client built into it. And then there's MetaMask, which is kind of an Ethereum browser thing. And then there's Mist, which is a full-on smart contract navigator. So if one of those goes bang, and you suddenly wind up with lots and lots and lots of websites that say, hey, if you want to be on this website, we recommend you download this browser, and you wind up with 10 or 15% of people on the internet who are browsing with a browser that has a payment engine built into it, I think you will get to that point where suddenly everybody agrees that system transformation has occurred, right? But we are not there yet. We're still at the point where you have to download weird-looking client software, and you set it up, and there are like terminal commands and things, and that's way over here somewhere, way out in early adopter territory. I did a talk at DevCon 0, the thing that we did in Berlin, called something like How to Sell Ideas. And it basically suggests that right over here, there was a single point where we had only one human being who was doing this stuff. It was Vitalik. We were now somewhere over here, and we'd gone from just Vitalik to about 100 people. And the question was how quickly we were going to be able to go from 100 to 100 million. And every time you multiply the number of users by roughly 10 to 100, the nature of the story and their understanding of the story changes. So way back over there was just Bitcoin and Ethereum. There was nothing generic called blockchain. The banks hadn't heavily gotten involved. The idea that governments would be actively supporting these technologies was unthinkable. And as we've gone along this curve, there's been this huge multiplication of interest, but also transformation of the story. So I think the next big jump is a browser-like entity, so that you're just going to things that look kind of sort of like websites, but they only work inside of a technology that has a payment system and a smart contract system maybe as well. Will we see that jump this year? I don't know. I think the biggest threat to the blockchain space is not regulation, it's actually virtual reality. I think that what you might see is that the press suddenly goes completely bananas when Oculus comes out, and everybody is running around like, oh my god, it's the age of VR, we've been waiting 25 years, woo! And the blockchain thing will just be like, yeah, that payment stuff, that's real cool too, right? And that might be quite bad for the industry initially, because it's suddenly, like, you're out in the cold and, there's no longer this enormous torrent of sort of joyful speculation from the press. But it's also the point where the grown-ups settle down and get to real work. The projects become fueled by actual business needs rather than by hype, and you build a ton of infrastructure. And that's kind of the trough of the Gartner hype cycle. And then the next time people hear about you, everything has been built, everything actually works. The governments are running a whole bunch of things like certificate revocation lists so they can flag all their dead passports and driving licenses, and nobody even realizes that it's, that thing that was hype 5 years ago is now solid. So I don't know whether we're going to stay flavor of the month right the way through another 2 or 3 years. It's just going to be hype after hype after hype after hype, or whether we're going to get into a period where there's no more hype and everything gets very, very, very serious for a while. I think it largely depends on how the public reacts to VR, AR, and all the rest of this kind of oncoming technology. As I used to say, Bitcoin's predominant competitor is not cash, it's not Visa. Their predominant enemy is not regulation. The primary threat to the Bitcoin economy was a successor arising. And I think it's pretty clear that Ethereum and Bitcoin have managed to coexist quite nicely because they exist in different political spaces. But similarly for the current round of activity around the blockchain, this is what we're doing today. Progress has not stopped, right? We don't know whether the technology which gets us over here will still be called a blockchain. We don't know whether it will look like a blockchain. We know for sure it will be cryptography and databases and decentralization and a few other attributes. But what that will look like, we're only going to discover that future by building it.
So you got 2 presentations for the price of 1. Thank you, Vinay. And now it's time for the student project presentations. We'll have them tackle the use cases that were set up in first public sector, then logistics, and then finance. And while we get the first team set up, I'd say that the biggest threat to blockchain becoming really popular is exactly that it might become popular, because we all know that when your parents use the same tools and listen to the same music that you do, you don't want to use it anymore. So that might actually be the biggest challenge, that all you cool kids won't develop good stuff for blockchain when your parents start using it. And also, of course, another big challenge is actually getting presentations on screen, or... No, I think it looks good. Or... Yeah. Are you just about ready?
Yep.
All right.
Ready.
Let us know who you are, and go ahead. The stage is yours.
Yeah.
And let's give them a hand.
Hi everyone. Is it working? Yes. We're happy to be the first student group to present our results from the Blockchain Summer School. My name is Benedict. I'm a PhD student from Germany. This is Jacob. He's giving a short demonstration of our prototype later. This is Felix, and this is Arun, and there should be Martin somewhere. He's over there. That's our team. So, as I said, we're happy to present the results from the hackathon. And, well, before we start with the presentation, or with the start of the presentation, we thought about what do we want to say? How can we put this to make it, well, accessible, easy, and understandable? So we will not go into technical details in this presentation, but focus rather on actually why should you use the blockchain for an application? Because in my experience, and I talked to IBM, to NASDAQ, and to other large players about blockchain and why to use it, the question is always, what does the blockchain provide? What can help us? Why should we use the blockchain instead of other systems? And I think this is a question addressed by a lot of people in the room as well. So we'll talk about this, and in our specific case, we will actually talk about how we can apply blockchain solution in the public sector to improve the way cars are registered today, and to automate the whole process. And we will show you why blockchain is a good solution for this. Well, first of all, I will talk about the challenges facing SCAD with the current process. First of all, there is a trust issue. It's the principal agent problem. Maybe you can raise the hands who is familiar with this problem. Okay, it's almost everyone, so I will not go deep into the topic because it's mainly, there's a market for lemons, which is a market for cars actually, and there's mistrust between buyer and seller because they don't have the exact information. Do I get the money? What are the properties of my car I'm buying, and stuff like this. So that's the first issue. In addition to this, there's a trust issue between them because the car has to be re-registered after the trade. And thus, well, if I sell my car and it's still registered for me, and the guy who bought the car is doing a robbery with the car or has an accident or whatever, it could be a problem for me. In addition, the registry certificates need to be correct. to know what asset I own, for example. In our case, a car. Well, and these cars can be rebuilt or changed or whatever. So it's very important to have a proof of the correctness of the certificate. In addition, we can provide with blockchain a history of the vehicle actually. This includes ownership, insurance information, have there been accidents, was there damage, was the car at the shop, whatever. So we can provide a full-scale information database on these things, and in addition, we can be sure that this is true. So we thought about, okay, what are the important requirements to meet these, to face these challenges actually. Well, the first one is focused on transactions. Transactions should be secure and automated, and well, they should work without a central authority, which is the major part of blockchain technology actually. In addition, the registration process should be correct and validated and automated also, so that SCAD or any other application is able to do this without personal effort and just do the process efficiently. In addition, we want to provide a registry and database for cars in Denmark. This database should be tamper-free, resilient, and transparent. And well, a distributed database has a lot of additional features like resiliency, redundancy, so there is no single point of failure. And if one client crashes on the system, there's still a whole database available. So it's actually quite neat. In addition to these core requirements, well, the service should be integrated with other services, like if there's a lease on the car, if there is a loan for the car that I can buy it, or if my insurance wants to automate the contract. And then we need to provide integration for these services, and blockchain also offers a good solution for this. Well, if you look at the specific requirements, it would be easy to use other database systems in order to realize these requirements. But we want to realize them all at once, and this is where blockchain comes into play. And the blockchain enables us to provide an autonomous transaction system and automated transaction of cars, and at the same time provide a valid and resilient database where we can access and have a record of ownership of the cars. Well, since we only had like 24 hours to do the case, we set some limitations because we cannot take all environmental factors into account. First of all, we assume that cars are imported into Denmark, and everything relating to the import is already done, and we don't have to consider it. In addition, the documents at the point of introduction to the blockchain are correct, and there's no chance of fraud or that for example, the car is damaged and the certificate says that the car is okay. So we excluded this situation as well. In addition, we assume all data is stored on the blockchain. If you go, I will talk about this later more. If we go into the future and take another perspective, it's important to think about what to store on the blockchain and what to store off the blockchain. But I will talk about this later as well. And in addition to access, every vehicle owner and potential buyer has to have the wallet software. So he or she has already the access point to the blockchain. Well, this is a situation we started with. Based on these assumptions and the requirements I told you before, we built actually several contracts that can enable the whole system. We used Ethereum, and thanks to the guys from Brainboard, we were able to implement complex context and had a full support, even in the night, and it was very nice. To get to the process, I will talk about this in detail later as well. There was the registration of the car, we need a history of ownership, and we need an automated re-registration process. So to integrate these processes, we used blockchain and built automated and secure transaction processing using blockchain technology. And now I will show you how we did this and what was the process we were trying to model. First of all, there's a seller and a buyer, of course. These are 4 steps. Some of them are on the blockchain and some of them are off the blockchain. So the first step where the buyers and sellers meet, we talked about putting this on the blockchain actually, but it's so complex to build a real pricing and trade and a good negotiation on the blockchain. First of all, it's extremely time consuming to do so, and it's not good for the performance of the blockchain actually. So we decided, okay, the buyer and seller meet in the real world and discuss the topic, negotiate terms, define the car they are trading, and just meet up and talk business stuff. Then we move on to the blockchain. This way, the seller initiates the offer, and the buyer of the car can accept the offer. This is the first step. I think Jacob will talk to you through the technical parts in detail and will show you what we have done there to do these steps actually. Afterwards, there's in the real world the exchange of the car. It's important to notice that the car is not fully sold yet. There's an acceptance on the terms and so on, but there's no payment and ownership hasn't changed right now. But the car gets exchanged, the key for example, and in the next step we go back to the blockchain and the seller takes over the certificate of the car. So he has the right to own the car. Actually, he or she owns the car now. At the same time, the payment is made. So we can be sure that the transfer of ownership only is conducted when there's a payment and a transfer of ownership actually, which was an important point of the whole system. Well, we're still on the blockchain, but how can we put real people in the system? We thought about putting them directly into the system, but blockchain is a transparent system. So, well, most people wouldn't like to have their real names and social IDs and stuff like this on the blockchain where everyone can access and do so. So we decided to use the public key of the node in the blockchain and connect it to the NEM ID, which is the social security number for the foreign students, and the corporate ID. Well, you can buy or sell a car as a firm or as a person. So these are connected and stored in the database of SCAD, for example. Furthermore, we provide a possibility to attach the key digitally to the car. So you can use the key only when the last step is conducted and the ownership was transferred. Furthermore, we thought about how can we pay the car. Should we use a cryptocurrency? But if you use a cryptocurrency, we have a risk to exchange rate changes. So we are exposed to the risk of exchange rates, which can be, especially in the case of Bitcoin, as some might know, the volatility is very high. And thus it was actually really important for us. Okay, here we go. It's really important for us to eliminate this risk. Thus, we created Danish krona on the blockchain, which is provided by a banking service, and it's like there's no exchange rate. It's just a representation of physical currency, actually. I will talk about this only very brief because it's the structure of a program. What we basically did, we introduced object-oriented programming to the topic and defined superclasses like the tradable in the market, which we then detailed, specified into the classes, the subclasses car and DMR, which is actually the exchange for cars, more or less. And this way we can provide a backbone actually to implement all kinds of trade. So we are actually not limited to cars. We only implemented the use case of cars. We can do a lot of other stuff like the change of houses. So if I own a house and want to sell it, I can use the system as well. For our use case, we implemented the cars, but this is a very powerful tool which can be applied to a lot of other topics. I think Jacob can say a few words when he talks about the rest. This is how we embedded the whole idea into the blockchain. Well, we had the token to have the money in the system, and we connected the Internet of Things as well. Because the car is actually a very smart vehicle right now. The car knows when it needs to be fixed or when you need to go to the workshop. So if you go to the workshop, they basically put the computer onto the car, and then, well, they know what's wrong with the car. We could use the same for this register to always have the current status and what does the car look like, where are some changes on the car, on the system. And to provide the record of ownership, we decided to use, the blockchain provides the record of ownership based on the transaction graph. So we decided not to implement a specific database, but rather to use the blockchain as a database itself. And you can provide a database out of the blockchain without additional, coding on the blockchain actually. Okay, now we will have a short demo of what we implemented, and Jacob will talk you through this.
What we have implemented is a lot of these so-called smart contracts. And what we're going to see here is one of those UI interfaces that are not really made usable yet, but we get to we get to look into how the blockchain is. First of all, we have 2 uses. We have one for me. We can see I have a lot of kroner. And we have Arun here, who's not as fortunate. But what we have here is that we have a central bank. This is the authority that initially gave me the Danish tokens that I have. We have our Danish motor register, and we have a car. And if we go here and look at the car, we can see that it's owned by Arun. And Arun, he would like to sell the car now. And I already did this because the transaction time takes some time. But what you can do is that you can go here to sell, and you can enter the buyer, and you can enter the amount. So if we go and look at the Danish motor register here, we can actually go and see for a given car. Well, it's listed as there is an offer between the 2 of us and the amount of the transaction. So what we can do now is actually to me as buyer, I can go and accept the offer. And here we actually see the strengths of the blockchain, because I can go, I would like to buy this item, and we can start like, so only the buyer should be able to accept the offer. So for example, if Arun tried to accept the offer on my behalf, he would be told, no, you cannot do that. The transaction is not valid. But as buyer, I'm authenticated to actually go through this. And what will happen now is, you need a safe password. What will happen now is that actually this amount is frozen on my account because I'm the buyer. And in the meantime, in the real world, we'll actually exchange the cards to the key. So now I have the cards to the key. I can see that they actually fit. And as soon as the transfer has gone through here, I can actually go and say, okay, I want to complete the transaction. So what happens here is that I say, okay, I got the keys, it's the right key, and now I want to transfer the ownership to me and release the money to Arun. And again. And in a second, we should see that the car changes ownership and the money changes hands. So if we go to the car here, as soon as this is done.
Maybe we can go back to this later.
Yeah.
And the first presentation just worked quite well, so that we could finish the presentation and then show the result of the demonstration. Can you? Yeah, thanks. So to give you an outlook, what comes next? Well, as I said before, this is an extremely powerful solution we implemented. This is a general marketplace which can be used for anything else. Like, well, the closest idea or the best idea, the next idea would be to use it on housing. When I want to sell my house, I think we talked about this in the first lecture, so I can bring it up. When you exchange your house, you have similar problems as when you exchange your car. So when you buy a new house, you can use the system as well. In addition, we can integrate tax support, for example. So we can implement taxation on the blockchain. So tax fraud is, well, harder to do actually, or impossible. And furthermore, well, the Internet of Things, I talked about this before. Well, it's actually the next big thing coming. So it would be great if we could use the blockchain, which is the current big thing, in combination with the next big thing to create the ultimate thing, actually. So, well, if we have, actually the blockchain provides a kind of an infrastructure for the Internet of Things, because you can integrate single devices into the whole solution and have like a structure for decentralized applications and markets and whatever you can think of. So the Internet of Things with smart houses, smart cars, smart fridges and whatever can be part of the blockchain and thus represent a node in the blockchain, for example. I already talked about additional cases like leasing. If you're interested in some deeper understanding of the further applications, you can always talk to us after the presentation. So we will be here and we will be happy to discuss these topics. Well, and that's it. Thank you very much for your attention. Also, you can vote for us. If you liked our presentation, please vote for us.
And lastly here, we can actually see that the money was withdrawn from me and deposited to Arun. And if we go and look at the car, we can now see that it changed owner. So this is how it works.
Thanks very much. And while the next team gets set up, let me remind you that you will be able to vote for the best student project. After the 3 presentations, we'll give you a web address and a QR code to have you vote. And that will be, the public winner will be announced as well at the end of today's event when the award is given to the best project. Also, as you might have noticed, I think it was a 16-character password that was inputted by memory, which was quite good. Let's hope it's not the same password everywhere. Also, I'd like to mention that if any of the other teams would like to use me as the recipient of all the Bitcoin, I'm available and will let you have my details later. Are you all set up and ready to go? Almost. Okay, so I'm almost at the stage now where I'll have to sing and dance to pass the time. I'll let you know another Bitcoin joke, actually. There's for your entertainment. There's a whole Reddit debate on Bitcoin jokes, which was quite interesting to take a look at. My favorite was Chuck Norris mined all Bitcoins twice. So are you ready? I thought that was worth a bit more.
Am I ready?
Okay, thank you.
Am I ready? Yeah, I'm ready.
The next team,
We're ready.
Give them a hand. Not me, them a hand.
Hello, everyone, and thank you for your warm welcome. We are Group Spitzenklasse, and we're here to present you our solution Crypod for Maersk. So Crypod is presented or promised by Ethereum blockchain and delivered using IPFS. In this presentation, we're going to remain a little bit high level and try to avoid the code, but we are going to talk about some concepts. So if you want to look more into that, I invite you to look into our GitHub to examine that. We, of course, did our homework, and you can come to us afterwards and look at that if you're interested. But moving on to what we're looking at here, let's first talk a little bit about the problem that we were dealing with Maersk. So Maersk came to us with this case and said that administrative burdens are, well, they're really annoying in terms of shipping. Basically, what happens is that shipping today is just not as digitalized as we'd hoped it to be in many other industries and similar places. We have a lot of physical paper trails. We have a lot of complexity with different infrastructures that have to work together. We have fraud. We have documents that can get lost, and we basically have a lot of delay associated with things that don't go as they should go. So we did a little bit of research to sort of examine, well, what's the impact of this and how big of a problem is that? And a report done by Cassandra Project says that $500 billion globally are lost due to a container ship having to wait in a port and basically do nothing. And so what can result of that be? Well, there can be a physical document, which is right here, which I forgot to sign, and that has to wait there until someone notices it. And before they do that, well, that big container ship can just stay where it is. So the impact of that is, of course, a tremendous amount of documents being produced, and in the big data days, kind of 100 million is not really something we care about anymore. But I would like you to think of this as something that people have to interact with. So these are physical documents that people read and have to sign and process. Kind of like you having to, I don't know, read your, every single time you download an app, you have to read the terms and conditions way through. So a lot of complexity and a lot of annoying things. A more qualitative example, business in UK, 60% of them believes that their products are ready to be shipped outside of EU and US, but they don't pursue that because they're actually afraid that the costs and complexity associated with trade will result in them getting damages that they're not able to handle if things go wrong. So that's kind of the problem which we were giving. And then we thought, or a lot of people have thought, why don't we just put it in the cloud? Why don't we just do what we're doing everywhere else? You know, we create accounts where we store a lot of different stakeholders. They upload and they share documents, and then they do what they're supposed to do. And we sort of take this long, cumbersome process of sending documents to London, physically sending them back to Africa again, having them signed, having them verified, and then setting the ship off. Well, the reason for that is that, I don't know if you can read it here, but the farmer over here, he doesn't really trust the ship or the customs over here because they actually just keep a lookout of him every moment they can. So he's not very interested in having them share these documents with him. Another part is that the forwarder and the trader, well, they're competitors, so they don't really want to share this database together. And the third option is that, well, Maersk isn't really interested in providing the service because the documents which they can store, which are profitable, well, no one wants them to store those. The ones which aren't, there's not really a business model to do that. So a report by SIP, a standard report by Maersk, indicates that no one is pursuing this cloud-based solution at a level where you can actually get somewhere realistically with it. So what we're seeing here is that there is a need for blockchain solution. There's a need for an infrastructure change in the way that we're doing these IT processes in order for us to actually produce something meaningful and to get into this digitalized era of trade. And so what I want you to think about here are some of the very common concepts you've seen before, where we remove those and change them out with blockchain concepts. So we have a Venezuelan oil company and a Danish oil company, and they're doing some trade together. They're going to use Maersk because that's their favorite partner. And so Maria from the oil company, well, she knows that when she has to sell something off to Denmark, she has to fill out 3 documents. One of them is an export, one of them is the bill of lading, and the other one is a fire hazard. Fire hazard, anyone can see that. Bill of lading, pretty important to some specific stakeholders. And so she's going to send this off to the auction house and say, hey, look, guys, you need to sign this document, and you need to either print it out or sign it digitally. I don't really care. I just need your verification that what you're doing here is actually that I'm allowed to send it off. So in this case, he chooses to print it out, and he signs the documents or stamps them, and he sends that back again and puts it up online. And actually the next part is that the Danish company is able to access these documents. So what we're seeing here is just the progress of trade, nothing special. The business company in Denmark is able to get the documents, process them, and get their containers ultimately, and conduct business, making everyone, making the world a better place and making everyone a little bit more happy. And these processes, these concepts we're talking about, they're very similar to the physical ones which we've already associated with and heard about in the previous sort of text and talks about Bitcoin and blockchain. But the change is here that we're looking at some code which radically changes the way that we can trust each other with this. So Johannes, if you can take us into the demo, what we're going to look at here is a smart contract which actually does all of those things which I showed in the video, but does it via code. So we're showing you an UI here. You can use anyone. You could also use the Ethereum client, but we chose to build our own. And what we're doing here is a whitelist where you can see that, well, Maria is saying, look, customs over here, you're whitelisted to my smart contract. So what you can actually do now is you can engage with this smart contract. We can see that that actually happens because we can log on to Etherscan. Any of you guys can do this. It's public information. Go in there, see the transaction happening. It takes a while sometimes. Oh, there we go. So it's actually been uploaded, and we know that this encrypted piece of information that something is happening. But it's not really relevant to anyone because they can't actually see what is happening. So what Maria is doing now is she's uploading a file. And she's uploading this doc permission, export permission document. And she's sending that off to the customs saying, hey guys, I'm sending you this file, and you can now sign it and process it. And she processes it with a hash key, which she also sends off to them so they know where to go. So if we go back again to the presentation, then what we will see is that the question is, we have a smart contract, we have these hash keys. How do we get all this? How do we communicate it? Well, we can use email here, and we sort of choose to do it low tech. We're sending out a message, dear customs, you can decrypt your file using this key, and you can access it here. So we're familiar with this before. It could have been any kind of URL, but this is a different system. This means that customs, they access the file and they decrypt it using the key that had been specified, but they know that they're the ones who are supposed to access it because they could go into the smart contract, verify that it was their Ethereum address who was supposed to be the ones messing around with this contract. If someone else went in and did that, well, they weren't whitelisted, so they can't access the document. Even if they did and hacked in, well, they would get a file which is completely useless because, well, an encrypted file doesn't really matter much when you don't have the decryption key. So we have this very secure and, should I say, trustless system where we can share things together. And so the next step on this, and the thing we want to build on, is Ethereum and the blockchain is one thing. But where do we store all of this? Because this public information in this encryption system is a little more complex, and we have to add an extra element to that. And that's where IPFS comes in. So if you guys have heard of BitTorrent or P2P sharing. You're familiar with this when you know someone who's downloaded a file once or twice before. What you've seen is that you can share these files, and they're kind of in this located anywhere, everywhere place that no one really knows. So you can't actually go to, authorities can't go, hey, Shanghai, give us those files, because they're not there. They're kind of everywhere. And this is the same technology, but what it builds and what the extra layer it adds is a hash key, which is the URL. So we're providing a hash key which the users who are supposed to engage with this, which we knew from the smart contract who were, well, they get access to this file. When they change the file, the hash key gets updated. So this is a two-way street. It's a different kind of encryption than what we're working with before, because every single time that file is updated, we get a new key. Maria can verify. She doesn't have to trust the customs are doing her job. She can see that herself. And customs can verify that Maria did her job because they got the file, and they got the form, and they got the keys they were supposed to get. So what we're seeing, and if we go back to the cloud here again, this sort of image, is that we're still in the same kind of we're still in the same picture, right? We still have all these guys, and we want them to interact with each other, but we have to respect that they don't actually trust each other. We have to recognize that we're not in this, as we talked about earlier, world where everyone can just trust everyone. So we have to sort of provide an infrastructure where different people who have no interest or means of trusting each other can still conduct business. And that brings us to, well, what are we getting out of this? Sorry, there. What does Crypod provide for Maersk right now, or in general for companies like Maersk who are interested in doing this kind of thing? Well, we're not really account managers or messing around with daily trading, but storing things on the blockchain is practically free, so that's always nice. Another thing is that it's a stronger and more decentralized way of storing documents, which ultimately allows for more people to engage. So we're not actually focusing so much on being the fastest or being the ones who can provide the newest. We want to do something that is very robust and has really been tried and tested. And then we're going to get bigger, because we can engage with customers and we can engage with clients who don't trust each other and who are not in infrastructures where there is trust embedded. And we can bring this technology to them and allow them to engage in business with us in new ways that weren't possible before. So what are we looking at in the future here? Well, we would love to show you could digitally sign the documents, which is actually possible, but that's sort of the next step here, right? If we can begin to sign the documents, then we have everything online. We can completely eliminate this physical process. And not only can we begin to bring this very powerful infrastructure, digital infrastructure, that the first world benefits from greatly, but we can also begin to do more things with it, more innovative things, and engage with newer customers in the same way. So is it a product that Maersk should build? It could be, if they're interested in doing that. It's also a research project which they can progress forward, engaging with other customers, engaging with competitors, thinking, well, if the cake gets bigger for everyone, then that's not really a bad thing for anyone. And that's Crypod. Thank you.
Thank you, guys. We'll have the third and final presentation, and I'm sure if people would want more details, they can find you after the event or during one of the breaks. I just want to remind you that you'll be able to vote for your favorite student presentation. After this third and final presentation, we'll give you an address where you can vote, and you'll have until after the coming break to vote for your presentation. Also, I would like to remind you that we have a debate panel coming up after the break, and you'll be able to ask questions right here, and you'll also be able to tweet questions using the hashtag blockchain_CPH16. We'll try to keep an eye out for those questions there. Are you ready? Okay.
As soon as he's ready, I'll be ready. You have the clicker, right? Mm-hmm. No, I don't have a clicker. So I have the computer.
Okay, you'll make it work. Oh, yep. Give the third and final team a hand.
Good afternoon, everybody. My name is Jose, and I'm here together with Ante and all the other members of our group to present you the result of the work that we have conducted in the hackathon for Nordic. The objective that we had is to look if we can build up a blockchain-based solution to make the know your customer process in a bank more efficient, easier, and actually cheaper. In order to give you a certain context, I would like to show you this slide. in which we will see how the onboarding process of taking one customer to make it able, from a regulatory point of view, to work with a bank actually works. We have a corporate customer, which is a big corporation, which intends to work with 3 banks. Then they agree on a certain product, they agree on the terms of the deal, price, interest rate, and then when the bank and the customer are settled and ready to start working, the bank says, well, wait a minute, I will verify you. I will verify that you don't have any kind of illicit intention. I will verify that you are not trying to finance terrorism. And for this, we will do this KYC, Know Your Customer process. Then, customer is asked to send documents to the bank, actually the same documents to every bank, in order to get verified by each of these banks. Then the bank verifies the customer, generates this nice little green verification, and carries with the cost of the verification. Well, what we propose in order to improve this process is to use one blockchain, which we call VeriChain, that will enable one bank to verify one customer, and then all the other banks that also work with this customer to read on the verification and actually reduce the cost and the time that they need to be able to work with this client. And this works as represented in this graph. One customer goes to one bank, they agree again on the terms of the deal, and then the bank said, please go to VeriChain, I will verify you. Then the customer interacts with this interface, sends the documents, and bank A, which is in this case the bank with which the customer is working, generates the verification and carries the cost of this verification. If later on the same customer goes to bank B or bank C and wants to work with them, these banks will ask for the verification again, but the customer, revealing his public key, will just say, hey, I'm verified, just check it, start working with me as soon as possible, please. So this is how VeriChain works. Additionally, we offer a kind of window for regulators to be able to observe what's happening here and engage them here in this process to be able to also do all this, or verify that the regulations that they mandate are actually being fulfilled by this interbank-owned blockchain. But now, if you paid attention, you'll see that there's something here that's not working very well, which is that bank A is actually, could you go back, carrying with the cost of the verification, and bank B and bank C are free riders here because they are not conducting the verification themselves, but reading the signal. For this reason, we have come up with a token system, which is actually the justification why a blockchain-based solution is good for this setting. In this setting, the bank A generates the verification for this specific customer, and then bank B, which is also reading the verification, while reading the verification, receives a negative token. Then, within VeriChain, we have an accounting system, a kind of accounting contract, which knows exactly which bank has generated the verification for which customer, and which banks have benefited from this verification, such that whenever a bank calls this contract, a kind of clearing process will happen, and then banks will have to compensate each other proportionately according to the work that everyone has conducted. In this case, we would see that since 2 banks have benefited from the verification, the price, as we see, or the cost of this verification is the original cost that we had divided by 2. If we go to the next slide, and we see that now bank C also benefits from this solution, the cost of verifying, of onboarding, of knowing your client in this specific process gets reduced to 1/3. So now that I hope that you understand what VeriChain is trying to solve and how it's trying to solve it, that it's also economically viable and the incentives are right set, we would like to present you the tool itself. And Ante is going to take over now to show you this.
Hi, can you hear me? Okay, now we'll dive into the technical part of the presentation, but I'll make it as simple as possible. So, in this case, we're using a private blockchain, so we won't see the transaction on a testnet because it was kind of one of those prerequisites that the banks can interact in their own chain and can exchange data in their own chain. This is why we created an own private blockchain with a couple of accounts and with a small front end for the user. So now let's imagine we have the customer view, we have the bank's view and the regulator's views, and they have their own interfaces and their own positions. So we start with the customer because the customer said, I want to be a part of this blockchain network. The customer has a public key, has a password, logs into this interface. And now he's able to upload a document to the first bank who's able to verify the customer. And now we're trying to select the document similar to the case we had in the last presentation, certificate of registration. It basically looks like this, that this certificate or the hash of the certificate is saved on the blockchain. So in this case, I can select the home bank. So on the other side of this interface sits the bank. The bank can also log in with their public key and now can enter the address of the customer. So in this case, I'm taking the address of the customer, which is this one. And so now, once the customer uploaded the PDF file, we can also use a distributed file system. I can send the PDF file via mail to to the bank. I can send a link over MySQL database. So basically, I can call the bank, tell them I send you a PDF file. What the bank can do is double check. So they log into the system. They have the address of the customer, and they pass it here. And what we're seeing is that the hash is basically the hash we just sent from the customer's account. So here we can see the hash I sent, which is CD and ending with 59. And we can see here that this is the same, CD ending with 59. So what happened is, when I sent the transaction from the customer's perspective, a new block was mined to the blockchain. We can see that here, we can see the address of the transaction here. We can see that the block is mined. Basically, the same as we've seen on the Ethereum or on the Ethereum interface online. We can't use this one because this is private. This is why we're demonstrating the transaction here in the terminal. And furthermore, once this is done and once the bank approves this customer, the bank can also decide to add addresses of different banks. So let's say Danske Bank or another bank, and therefore those banks will be able to see the hash file, will be able to see that another bank already registered this customer, and therefore the onboarding process on the side of Danske Bank, for instance, would be cheap, or would cost nothing because Nordic bank already did it, and therefore we don't need the cost anymore. We can use the token systems in order to get the reward for the work done. And then another part could be the regulator. So we talked to Nordic bank, and also another problem is that the regulator can always knock on the door and ask for the customers and also the letter of certificate. And this is not implemented yet, but what we could do as a regulating party, we could pass the public key of the bank. We could get a list of all the customers in this database and their mapped hash codes. So what the regulator can do on a digital level, seeing those documents, he has verification or the proof that those documents are those which are already sent because the hash is on the blockchain, and therefore also the regulating party, auditing part could be enhanced from this point of view on this interface. That was a technical presentation, and now I'm switching back to Jose.
Thank you very much, Ante. So now you have seen what's the justification to creating VeriChain. You have seen how VeriChain actually works, and I would like now to wrap up a little bit and see what are the consequences of using VeriChain. And then what we consider is the highest innovation, despite the fact of using blockchain, is that we transform the role of the bank. Now, with VeriChain, we don't see the banks anymore as only providers of financial services, but we see the banks as the trusted identity verifiers, meaning that banks actually are now the door or the window between the analog world and the blockchain world, because we live in no blockchain utopia where everybody has already a blockchain ID, and we need, in this transition phase, in order to reach this point that we saw in the first presentation in a fast and smart way, we need to actually go through the smart way, and we think that banks could actually change the way or decide the way in the path that we take and actually go through here if they transform a little bit their role into verifying clients and enabling or using VeriChain or a similar structure to enable much new businesses. Like, for example, when we talk about generating letters of credit or generating documents for big customers shipping big boats along the world, if the bank can actually say, okay, this is my customer, and I verify that this is my customer, okay, let's put the documents there. Let's put the ID, but also whatever they need, letter of credit, certificates, etc., such that the customers can actually exchange this with their counterparties. And this would also allow the legislators, the regulators, to have a big overview on the whole structure and see what actually is happening in the business in a verified, trusted way. And I would like to finish by showing you one quote that we read at the very beginning of our hackathon, which said, in the blockchain, nobody knows that you're a fridge, which is actually an unknown quote. But what we would like to see in the future is that thanks to structures like VeryChain, the quote gets changed to thanks to bank, I can prove in the blockchain that I'm actually a fridge, and be sure that it is a fridge who is saying this. So if you have any questions, please do not hesitate in asking, and thank you very, very much for your attention.
Thank you very much. There'll be time for questions afterwards. We are a few minutes past our scheduled time. So I'll just remind you that you can vote for your favorite presentation. You can go to this web address or scan the QR code, and I've been asked to remind you to use the final slash, otherwise the address won't work. And you have until the end of the upcoming break to vote, so you can do that in the break as well. But we have one final presentation today before that break, and before we have an exciting extra hour or so of panel debate and presentations. And we're going to look a bit more about what the blockchain can be used for in business and how it might become real. Topic I'm sure we'll return to in the panel debate and the later presentations. So Paul, from IBM, you're also a racing car driver, I believe.
Yes, I am.
Yes, and so
Yes, I am.
Will you share with us your vision of the idea of using blockchains and bitcoins for self-driving vehicle fleets, or are you generally opposed to the idea of self-driving cars being a racing driver? You can return to that. I'll just let that thought simmer.
Interesting discussion.
Yeah, we'll do that
another
afterwards.
time. Yes.
So please give Paul a warm hand, and we'll look forward to hearing what you have to say.
Okay, so hello, and thank you for this wonderful opportunity to be here with you all today at this blockchain summit at the university. Some incredible presentations already, great ideas. I like them. As it says, my name is Paul Krogdahl. I have not only the pleasure of being a technical advisor to one of the largest banks here in the Nordics, I also am the IBM representative of blockchain in the Nordics, which is what I'm going to talk to you about today. And with your permission, I'd like to share some observations and thoughts that I have around blockchain, which is also with input from a very recent report that the IBM Institute for Business Value published on the exact same subject. And I'll basically just get a very high-level view of how I see blockchain and how IBM sees blockchain. So we'll stay away from technologies and those sort of things. And I'll also conclude towards the end with a concrete example of where blockchain actually has delivered business value, which I think could be interesting to look at. But I put it to you that we live in a world that is more interconnected today than it ever has been, and where advances in technology are driving new innovations and new disruptive business models. But despite innovation and technology, organizations today are hampered by what I will call friction. Now, over time, we've used technology and innovation to take away barriers for progress. The Silk Road connected east to west. The first letters of credit helped us to find a new way to manage trust between parties in a transaction. And the internet put us on a fast path towards new business models for e-business and e-commerce. But whilst the internet and technology assisted in flattening and removing friction, friction still remains. And the friction that does still remain is substantial. And it's being used by startups and agile organizations to drive disruption across every single industry. And there's also new frictions that are emerging. Cybercrime, as a prime example, is costly to prevent and even more expensive to recover from, especially if we start to think about the impact it has on trust. The impact that it has on the image and brand of organizations. But this is not working. But there's also other elements of friction which are causing cost and driving delays for organizations. Data, we are told, is the new oil. And it's true. We are generating more information and more data today than ever before. And the speed at which we're generating information and data is accelerating. We are struggling to figure out not only where are we going to store this data, how are we going to access the data, how are we going to catalog the data, how are we going to utilize the data. But more interestingly, from a business perspective, how do we ensure that all parties in a transaction are acting on the same data? If they're not acting on the same data, you end up in decisions and bad decisions being made during transactions. Even worse, when you try to reconcile, you're reconciling against information which doesn't correlate. There's huge issues in risk with data. We talked about cybercrime a minute ago, but also risks around identity theft, information getting stolen, information being used for the wrong purposes. There's friction around interaction. As the world is slowly shrinking, as it's becoming more and more integrated, more and more connected, there are organizations and individuals that are stuck on the periphery, that are failing and not being able to join in. Maybe the barriers to entry are too high. Maybe the technologies that allow them to play in the marketplace are too expensive. Or maybe they're just sitting in a country where the development is too expensive for them to take advantage of. And innovation. As organizations grow, they stagnate. They build legacy. More and more legacy that prevents them from being agile. What if we could remove all of these frictions? What if we could take most of the frictions that we are facing today and get rid of them? Well, I put it to you, isn't that the premise of blockchain? If we took blockchain and looked at the fundamental things that blockchain is promising, organizations, large organizations, could start to scale horizontally, rapidly scale horizontally, partner with new players that they couldn't consider before. Basically develop new business models, reinvent their organizations. They wouldn't have to start again, but they could do very much and very different things. Blockchain will tighten trust. We are basically being able to create trust in a trustless world. It was interesting, the example for Maersk talking about we're taking away trust. I would say that with blockchain, what we're actually doing is we're giving the ability for the individuals to be able to trust based upon the agreement of the wider community. The interesting thing then is what happens to the people or the organizations today that are marketed on owning trust. But with all of this, right, we are in effect going to see a new nexus for value change. But I think whilst blockchain as a concept is new, we've been on a journey. I think what's happened is that a number of technologies that have developed over years and started to merge. Yes, there's been reasons for this, there's been organizations and people seeking new ways of managing trust and managing technologies and transactions, possibly outside of public view. But due to advancements in advanced computing, in cloud, and distributed systems, married with the specifications that came out of Bitcoin, we've started to build a new way of communicating and doing business, the blockchain. But more fundamentally, what we've also done is we've created an environment that, whether it is permissioned or permissioned-less, which I think is a very important point to talk about. I agree that there is an awful lot of value in a permissionless network, blockchain, where everybody can be a member, where everybody is anonymous, where everybody can see every transaction is happening. But from our perspective, we are talking about blockchain for business purposes between parties in a business network. Do you really want a blockchain to be permissionless? Or even as individuals, we talked about the fridge being connected. If you had a self-drive car that was communicating on a blockchain, would you want that car to really be on a permissionless blockchain? Or would you much rather know that the entities that are on that blockchain that can see where your car is or what your car is doing have at least been identified and have been given permission to be a member of that blockchain? So today, organizations, when they are transacting with each other, they are putting information onto a ledger. And the information they're putting onto the ledger is a snapshot in time of that transaction. And it's a very restricted snapshot. In fact, it's so restricted that what the sender and the receiver have might not even correlate. And even more importantly, as it moves on to a new transaction, the history does not flow with it. So we had some great examples here already, and most of you are experts now in blockchain, so you know the benefits that blockchain is going to give you. We're moving from a ledger that records a transaction in a moment in time to becoming a repository of an asset's life cycle. And we can follow that asset from birth to decommission. And the people who have been deemed relevant to have access to that information can get that information. And the people that are deemed not to see a specific asset or a transaction of an asset can't. So from a blockchain perspective, we believe that there's a number of attributes that actually builds up the concept of a blockchain. It is distributed and sustainable. Now I want to just for a minute say sustainable. If you were to look at a central database today that everybody has got access to, which is owned by a central organization or individual, if that organization disappears, what happens to that database? In a blockchain where everything is distributed, the impact of an individual does not impact the many. It is secure. We know that. We're talking about encryption, and we talked about that all morning. Actually, all afternoon, I apologize for that. But encryption is important, and security is important. We want to make sure that individuals only see the information they should be able to see. And I think this is interesting, again, because we look at the concepts of networks which are permissionless and support anonymity. Now, from an anonymity perspective, you could say that I don't know who you are, but I see everything you're doing. Right? In a business network, we want to reverse that. We want to be able to say, I know who you are, but I don't necessarily need to see everything you're doing. So I think it's important to think about security and indelibility from the perspective of why is the blockchain being used at this moment in time. Transparent and auditable. All the transactions are transparent, and they should be auditable. And everything is documented based on consensus. I'll labor just for one split second again on consensus. There are multiple different approaches for developing consensus algorithms. I'm not saying that mining is a process that isn't a good consensus mechanism. But again, if we step back into business and think about organizations that are wanting to run a blockchain, the mining process is pretty heavy for that, particularly in a permissioned network where all the players should know each other. And one of the real benefits of blockchain, if we are able to codify the business processes and the contracts on the blockchain, it makes the blockchain immensely flexible. It becomes an awful lot easier to expand the purpose of a blockchain to include additional business processes and to generate additional value. I had an example here which actually I believe that one of the presentations we saw a minute ago for Maersk presented this so well. I don't really think I need to repeat it again, but I think the value that came out of that is blockchains really generate value when you start working across industries and with partners. And supply chain really is a prime example of that. Right? There are so many players, from the person who is owning a product and shipping it to someone who's purchasing the product and receiving it. I said I was going to give one concrete example. So I'll do that. We as IBM believe that sometimes you need to taste your own food. So we did that. We, as some of you might know, are also, to a certain degree, a bank. We have a financing company, and we finance an awful lot of customers and projects. So as you can see here, I mean, we've got over 4,000 suppliers and partners worldwide. And we finance around 44 billion a year. Now, one of the issues that we were having were on disputes. And disputes can be real silly little things. All the way from, why have I got the wrong tax code? Or I haven't received my part? Or what I ordered was a different color, right? Anything. And every single time you get a dispute, it freezes up capital. Yeah? It's stuck. So until you can clear that dispute, you can't get that capital out. So IBM said, what about if we can find a simple way to reduce disputes in our process? So we took blockchain and we underpinned our existing processes and applications, created what we called a shadow chain. We didn't throw away what we had, we just put it at the bottom. We said every single time there is a point that can be agreed on in our process for financing, we will document that onto the blockchain and we will reach consensus on the fact that it's happened. So that's from, requesting the finance to making the order, to having the product shipped, having the product delivered, remittance, payment. In a trial run, just in the US, we managed to reduce disputes from over 40 a day to under 10. And the most important thing was we freed up approximately 40% of capital. Now, if we go back to the amount of money we were talking about, I would say that's pretty good, right? And now we're looking at, can we roll this out worldwide? And then how much capital are we going to free up? I believe, and IBM believes, and we had a discussion here this morning, you mentioned about open platforms, open technologies. And I agree with that. In my perspective, fundamentally, blockchain is going to do for capital what the internet did for information. But for us to be able to have that access and freedom to information, we needed to have open standards at the bottom that everybody agreed on and could live with. So we have TCP/IP, and we have HTML, and it's taken for granted, and it's what allows the internet to work, and what allows us to have access to that information and data that we search for every day. Or if we want to free up capital and ensure that we get flow of capital faster over a blockchain, we need to do the same thing. The blockchain should be there. It should be open, it should be agreed on, and it should work for everybody. Now, that doesn't mean that I think that there's going to be one blockchain that rules them all. I believe that there's going to be multiple, very many blockchains. And I think it's critical for businesses and organizations to take one step back. I agree this is exciting, but to take one step back and really look at where is the value of blockchain? Where is it going to generate value for me? Ask yourself a number of questions and say, where are we going to implement this? Because businesses must be careful in evaluating the use of blockchain. So that was just a very quick overview and summary of mainly my observations and thoughts, partially backed by reports from IBM and the work that IBM is doing. I hope it was of value. I would love to discuss blockchain with you much more and what IBM is doing. So I'll be here all day, and thank you very much.
Thank you very much. Thank you very much. We'll leave the questions for later. We are a bit... sorry? You're trying to signal me and I can't. Yeah, 20-minute break. Yeah, okay. So we'll do that, which means we'll be back here at, let's say, 3. Think of this more of a stretching your legs break than a sit down and have a chat break. So we'll begin again at 3 with our panel and the final presentations. Thank you. Right, ladies and gentlemen, let's get started again. Please find a seat and we'll get started again. And for the next, 55 minutes or so, we'll have a panel of experts from difficult industries as well, I'm sure. We'll have a few questions, both in terms of what their industries, how their industries look at blockchain in general, what are some of the opportunities, some of the challenges, and then we'll go into a few more details, perhaps some specific examples, and then for the final part of the panel, we'll open up for questions from you, the audience, as well as people out there, if there's still anyone looking at the stream, or via Twitter. Use the hashtag blockchain CPH16. So you can think of questions while the panel talks. I won't go into too much detail about their backgrounds, and you can see who they are, and I'm sure you know them all and have looked through the program. But I'll let them introduce themselves in a couple of words, and then go through the first question of how do you think blockchain will affect your industry over the coming years. And if you have no objections, I think we'll just start with Morten and go through the panel. So please.
Okay, so thank you very much. My name is Morten Holm Christensen. I work in Maersk Line, have been there for 3 years, and prior to that for a number of years in Nordic. I am certainly not an expert in blockchain, but I am to some extent an expert in the problem that we have in Maersk Line. And the problem is fundamentally that the latest innovation that really mattered in the global container industry, liner container industry, was the invention of the container. And that's 40 years ago. And that was a brilliant innovation. Actually, the container is the foundation for the way we live here in sort of the Western world. It's also the foundation for the way that many countries in the sort of third world have grown over the last 2-3 decades. Actually, the industry has become so efficient that you wouldn't believe the amount of money that we are missing in our industry. So for example, if you go down to Strøget here in Copenhagen and buy a pair of Nike shoes, you will pay something like 1,000 kroner. 2.5 of those kroner is ocean transport. So that's our share, if we get the deal, of the Nike shoes. If you buy a bottle of Argentinian wine in Føtex, let's say you pay 100 kroner, there's 1 kroner of ocean transport in that bottle in the shop. So very difficult to be a French wine producer, actually, because your competitive advantage in terms of distance really doesn't matter anymore. So the liner container industry has become extremely efficient because of one brilliant innovation, the container. Problem is, it's 40 years ago. So what has happened is that the industry has become commoditized, and a commodity industry is all about price, which means that competition is all about cost. And add to that it's a very cyclical industry. Then you get a lot of bad years. You can read in the papers that we are struggling right now because prices are very low. They will go up again in some years when some have died from this price competition, but then you will have another price competition. That's the problem. We have become commoditized in our industry, and if we do not find a way out of that, we will stay commoditized and our share price will stay where it is. So, another way to look at it is we have made an estimation. If you look at global trade and say a commodity or a good is priced at 100 kroner at the wholesale level, 8% of that 100 kroner or 8 kroner goes to transportation. 22% goes to document handling, different kinds. Authorities, customs, what have you. So with that in mind, we back in March went to Kenya and followed a transportation of flowers from Nairobi to Antwerpen, and recorded the documents that was involved in that shipment. And I haven't brought it here, but it's actually more than 25 centimeters of paper to get roses from Nairobi to Antwerpen. So that's one problem, enormous amount of paper. The other problem is nobody really knows this stack. We came back with this stack of paper to our CEO and said, so this is what is involved in something as easy as roses from Nairobi. And he has been in shipping with 30 years and is a brilliant shipping guy, but he didn't know. So that's really the problem. Nobody really understands the complexity of global trade. So that's what we are trying to address here. Our vision is to transform global trade. Our vision is to get out of paper involved in global trade. Our vision is that global trade should basically work like many industries have now gone to, but it hasn't hit transportation, logistics, and certainly not shipping yet. A big part of that is, of course, security, authentication, authorization, and we think that blockchain can play an important role in that.
Thank you, Mark. Jesper, how do you think blockchain will affect your business, so to speak?
Well, we also want to get out of paper in our business. I'm the CEO of the Danish Tax and Customs Administration. And a little bit parallel to the story that you were talking about, 40 plus years ago, you could say that the foundation for the Danish personal tax income system was made also. And at that time, we were actually, you could say, on the forefront of thinking in digitalization and automation of the personal income tax. And therefore, we also have a very high degree of compliance in the Danish tax society, you could say. Problem is that we fundamentally not have changed a thing over the last 40 plus years. You could say we are building on the same mechanisms that we have had for many, many years. And you could say that we are standing right now at a crossroads where we have to choose which way to move forward in terms of building a tax administration for the future. We have been passed by several technology innovations and new systems, new ways of thinking, because we have had, you could say, a stable system that has worked well for many, many years. But now they are categorized as legacy systems, as I guess many of you also have in some way. And actually we think that's a little bit, you could say, dangerous not to do anything about in the coming years. So we are at this point regarding to blockchain and similar technologies, also of course artificial intelligence, advanced use of robotics and other things. We are a bit curious of not only the effect on society and the changes that are going on in the world according to globalization and all that, the changes in people's behaviors, the changes in economic transactions, new types of economies emerging, sharing economy, circular economy, crypto economy, and so forth. And of course, as a tax administration, we are interested in everything that has some sort of economic transaction in it. And what we can see with blockchain and similar technologies and also other sorts of technologies is that they are changing society and therefore also changing the way that economies are working, our society is working, and that in the end will also of course affect the way that we are a tax administration, the way that we make the tax administration work. So one of the things that we have been pursuing for the last year or so is trying to, you could say, understand what is on its way into the technology and digitalization of the economy and the flow of economy in a global sense, of course, because that also has a great effect on tax administration in Denmark. But can we also use that in a way to make a future tax administration? And this is not only a discussion going on in the Danish tax administration, the OECD and the G20 tax administrations has the same discussions. But at this point, you could say that we are really trying to understand what is going on and what is the potential and what is the challenges from these new technologies, and how will they not only affect the economy in the Danish society or global, but also of course the way that we work with tax administration in the future.
Trying to understand the new technologies and how they work and how they affect us, that's what we all try to do, I think. Thank you, Jesper. Stefan, your initial thoughts on how do you think blockchain will affect basically us all, from transportation through economy to taxation and everything?
My name is Stefan Gössel. I'm a founder and partner of the management consultancy Leadwise, and we are part of the Reply Group. And so we are consulting to the top 100 companies in Germany, and Germany is very different from the Nordics in culture, and you already heard this in a great session. And for us, there is one question: will our customers still be there in 10 years? So we do banking and life science and telco. Telco is a lot of IoT, Internet of Things, and what we see in Germany, we have some global players in all three sectors, and they are not moving very much in the direction of decentralized ledgers or blockchain. And I personally think this is a mistake, and I think it's all about values and vision, and it's not about technology. And what we are doing as a consultancy is we have, like always, 3 parts or 3 sessions that we do, and the most important one is we call it an executive briefing. And the only question we would like the client to answer is, do I have to care about blockchain or not? And this is a lot about intermediaries and stuff like this and cost cutting. But in the end, it's about your values and your vision for your companies in 10 to 20 years. And so can you envision your company to be a part of a decentralized network, business network? And so it's very important to understand, let's say, the business capabilities and the underlying values of blockchain. And what we see up to now is there are not a lot of executives in Germany who think through this, and there are even less who care about those values of decentralization. And I think this is a pity, and our mission is to move the German executives a bit in this direction and to create some understanding what is possible and what is not possible. And this is not an easy process. And the second phase of our consulting is the typical stuff where you just analyze the value chain and the business model and say, okay, where does blockchain fit in here? But this is where everything comes into into momentum. But I think if you did not answer the first question, this is quite scrapping on the surface, and it's not going deep. And actually what we see is the real innovation will happen in the, let's say, in the public blockchains and in the permissionless blockchains with an ecosystem around it. And so I'm not too much on the IBM statement here, but I think you are right that businesses have to start with permissioned blockchains. But nevertheless, if you look at innovation, for me it's clear that most of the innovation will happen in the permissionless public blockchains, and we are trying to push this into the minds of the executives.
All right. Thank you for that, Stefan. You mentioned your worry that not all of your clients would still be here in 10 years. I'm guessing that Nordic will still be here in 10 years. We'll see. Let us know, please, Paul, how blockchain affects the banking world in your view.
Okay. Hi, guys. My name is Paul Roholt. Today I'm the Group CIO in Nordea, but starting from the 1st of September, I'm the Chief Digital Officer, where I will start a fantastic new unit called Group Digital with my new friend Ewan MacLeod, which we have hired from Royal Bank of Scotland. If you want to know where the most exciting place to be in digital, I will claim it is digital in finance, digital in a bank. There are so many interesting changes. We have changes in customer experience, customer expectations. We have new business models emerging, new products, new services, and we have a ton of interesting technologies that are simply exploding. And we are only seeing the beginning of it. So if you are wondering where it's interesting to be, it's digital in finance. When we then zoom in on what about blockchain, where will it all end? I think, yeah, as they say, it's difficult to predict, make prediction, especially about future. But it is so that I think it's rather early days, actually, when it comes to blockchain in particular. Earlier today, we have an excellent presentation with these curves. I think we are rather early on what will turn out to be an exponential curve. And that is rather interesting, since already now the amount of energy in the blockchain space and the amount of ideas are enormous. Could it be more? I predict so. However, from idea to living system, there is actually some way. I'm so old, I can remember internet when we did web. Before that, actually. And it was quite cumbersome. You have to be a bit nerdy to actually operate all that. All that changed when we got the web browser and TCP/IP and all these web tools were part of our developer bags. Then suddenly a new breed of people entered into the space, and they were not like us nerds, so to speak. They had other ideas, and suddenly everything exploded. Yeah, actually too much, as you remember, around .com. But I think we will see the same. When the technology itself matures better, we have better standards, when we have better tools, when the coding, so to speak, becomes every day, we will see many, many more ideas. Right now, we see that the features which our Norwegian friend went through earlier today, the combination of those features of blockchain, more or less, in my mind, point directly towards financial agreement or financial contracts. They lend themselves rather well to be lensed through the blockchain lens. And what is not financial transaction or agreements nowadays? Very little. So any exchange of value between partners could actually be an object for us. But of course, there are certain buzzwords or key areas. Payments would be natural to start with, since in a certain sense, the mother of it all was Bitcoin, and it is in essence a payment system, at the surface at least. Smart contracts is also a very exciting area. Having the idea of executing financial contracts and agreements in code is interesting. There are no limits to where that can be taken. Smart assets, we have talked about that earlier today. Clearing and settlement is clearly also an area where there is friction and unnecessary cost, probably. And then we have also touched upon digital identity here. So there's a lot ahead, and you are already part of it.
Thank you for that overview to all of you. And let's go into a few more details. Perhaps we can start with you, Morten. When you're not any longer required to transport huge stacks of paper around in your containers, I don't know how much you'll have to scale down when all that paper won't have to be transported, but I'm sure you've already projected that. But let me know in a bit more detail, please, how are you looking at blockchain? We've already seen an example today of how it might be used, but how are you already integrating it? Are you running pilot projects? How far along are you at looking at this particular technology?
So the case that we threw up for today, the second one of the presentations we had, is actually a pilot experiment that we're doing. So we are engaging with a number of authorities, so customs, harbors, different kind of shippers, to actually try out a paper-free global trade flow. Pieces of this we run through a blockchain. Those pieces where there needs to be security around the documents, and those pieces where there needs to be a authentication of the different players. And let me mention an example of that. So this Kenya story, Maasai flowers down in Nairobi, they almost always send their flowers to Europe by air freight. And it's really not because the flowers cannot survive the 23 days it takes with sea freight. It's more that they cannot be certain that they will be gated out of the harbor in due course. And one of the latest examples that they had was a special certificate that you need if you export plants from Africa to Europe, a so-called phytosanitary certificate. You need that to get your container out. It's issued by an authority in Kenya based upon an inspection of the flowers when the container is closed down in Nairobi. And then what happens today is that that particular certificate is air freighted to the freight forwarder in Europe, and then the trucker who is going to pick up the container in the harbor needs to present the phytosanitary certificate sealed and signed and everything by the Kenyan authority. And Masai Flowers, about half a year ago, actually tried the sea freight route because it's a lot cheaper than air freight. And they lost $100,000 worth of roses because the trucker came from Hamburg and he simply forgot that piece of paper. It was in Hamburg, he forgot it. Now, the blockchain solution that we are trying out now, we put the phytosanitary certificate on the blockchain. And thereby we have the Antwerpen port authorities and the Kenyan horticultural authorities connected on the blockchain, and thereby ensure that the Antwerp port authorities can bring up the certificate electronically. So it's there, it's always there, and they're authorized to see it.
And now you mentioned this being a pilot project. Do you have any estimation of how big a part of your, I don't know, monthly transactions will be running on blockchain on this type of solution in, say, 5 years?
No, not yet. And I think that's the nature of this. I mean, you have to try out things. What we do know, though, is that the revenue pool and the value of this is enormous.
So, Jesper, how far along are you in looking at actually using blockchain at scale? Are you running pilot projects? Are you paying your own taxes in Bitcoin, or assuming you do pay taxes? But, sorry.
It's okay. I pay my taxes, but not in Bitcoin. So. Well, actually, it's quite an interesting example we just got from, you would say, that part of my business, that's the customs part, because actually right now the EU has adopted a new union customs code that applies for all countries in the EU, and it's up to all countries in the EU to figure out how to implement this union customs code due to differences in data and systems and all that. And in Denmark we have actually been seeking out, trying to find out if there were some partners in some of the other EU countries that we could sort of hook onto and maybe get a copy of their systems that we could implement in our system, but that turned out that was not possible. So right now, all the EU countries are working on trying to get this union custom code into a new setup in data and systems and so forth, and it has to be implemented by 2020. And that will be at least 28 different solutions, I think, to implement this union customs code. And you could say if we were a little bit longer in blockchain technology and understanding of the blockchain, then one system could sort of fix that. Then we could have a common standard and a common system that could exactly track and trace all transactions and moving of goods across border and make sure that customs were paid, the certificates were okay, and so forth. And if you look just at the Danish example, it would be a rather large investment actually in making this new system that maybe not could be solved by a blockchain technology or thinking. But we are not there yet, and we are not, you could say, sure that this is the way that we should go, but that's why we are trying to explore it and learn more about it, because the potential also for administration and tracking and have a record of transactions, and especially some of the examples that we heard before, that you can track who owns which assets is extremely interesting, of course, for a tax administration. So if you have, you could say, a bulletproof system, and you always know who owns a stock, a house, a car, or whatever, that is very, very interesting from a tax point of view, and globally wise, of course. We have right now, well, not only in Denmark, also in Germany, actually, and some other countries, there's a lot of debate going on trading stocks and the tax deductions you can get from trading in stocks, and some of the difficulties there is actually to identify who owns the stock at what time. And if you use the blockchain technology, there will not be an uncertainty, you can say, about that. So the potential of this thinking is enormous, not only for, you could say, economic transactions, but also for the work that we do in a tax administration.
Just very briefly, you mentioned this being a challenge for all European nations and working towards this new system. If you sort of pooled your efforts, do you think you would be able to create a blockchain-based system to comply with the new rules?
Maybe I agree with the point made over here. Maybe we're a little too early on the curve, you could say, but you don't know. The speed of change is very, very fast nowadays, and it's only accelerating. So yeah. Who knows?
Who knows? All right, thank you, Stefan. Has this affected your own work, or perhaps if not, then what are some of your favorite examples of people actually trying this out, making it work?
So first of all, it does affect our own work as consultants. So it's like if you look 20 years back and you were a COBOL developer or something, an IT consultant for mainframe systems, and suddenly the web came in and you did not get it. Maybe you did 10 or 15 or 20 years of mainframe stuff, and suddenly everything was different, like you said. So you were a nerd, and there were new people coming in, and it was very, very difficult to come up to speed with these new, let's say, not only technologies, but also ideas and concepts and stuff like this. And for me personally, like 1 year ago, or let's say 3 years ago, I had a look at Bitcoin and I said, I don't like it and I don't need it. And it was the first mistake. And like 1 year ago, I had a look again at it, and I had this feeling that I don't want to be the old consultant that does not get the new world, and this triggered something in me. And so 1 year ago I dived into this, and this was within 20 years of consulting, this was the first time ever I didn't realize, or I didn't get a topic within a day, and not even within a week, and not even within a month, and it was more like 6 months, and then I thought, oh no, I understand a bit of this, and this was so different from everything I talked about up to then. So so I think I'm on the curve now, and I'm trying to get all our consultants on the curve, and it's not easy, and then we can bring our clients up to this. And for this, 1 year ago, we founded a global blockchain competence center. And this is a virtual competence center. It's spread all over Europe and some in the US. And we are working on a lot of stuff. And if you look 20 years back, with the internet, you just needed an HTML developer and you were online. And today, you need a couple of guys. You need a visual designer, you need a usability designer, you need an enterprise architect, you need a software architect and a test manager and what's not. And today you need a blockchain expert, and you're done already. And we think like in 5 years it will be the same. You will have specialized experts for different topics in the value chain of creating blockchain solutions. And we bring together those people. So we have legal people, which is a very important point in this. It's the first topic we discuss in those executive briefings in Germany, for sure. So they say, oh, legally it's not clear what it is and what a smart contract is, and that's not true. And so we have those legal people, we have strategy people who understand the technology, so it's me. And we have technical people, and so all together you can dive into this topic. And if you are missing one perspective, I think it's not the real thing. And we try to give this value to our customers and give them a full perspective. And so we don't have any conflict in interest because we don't sell any solutions or stuff like this. We just want to create new business models with together with our customers, and this is, I think, what we are doing. And I think everyone is agreeing on this, or on this. We are on the very, very beginning of all of this, and I think today what you mentioned in your session is a question: how many different innovations can a company or a person or an executive cope with? So you say IoT, and then you say virtual reality, augmented reality, and you say blockchain, and these are completely different perspectives on something we are emerging to this point here. And I don't know too much people who think on this holistically in a business sense. And in the end, it's not only business, it's society. And I'm wondering how much change and how much speed and acceleration of change we are able to cope with. And I think this will break some of the big companies because they cannot cope with this massive amount of innovation and change. And we will see a completely new, let's say, business world, and we all hope that it will be, the value will spread to the edges of this distributed networks, but I'm not sure it will, but we will see how this will work out.
Thank you. Paul, you mentioned taking a new position, building a new department. Is that correct? And did you already hire your blockchain expert? Because apparently that's all you need. Okay, you have them already. Fantastic.
They are distributed throughout the organization. We are simply orchestrating all of that.
The employer chain.
Yes.
Okay. So we're a bit late. I'm constantly just getting fascinated with what you're talking about, so completely forgetting that we have to have time for questions also. So I'd like to open it up to the audience now. So if there are any questions for the panel, please let me know, and we'll get a microphone to you. And there's a guy there on. Well, we'll begin with Vinay, and then the fifth row afterwards. So Vinay.
So I was just going to say, I think the critical coping tool is science fiction. Science fiction basically gets kicked out of English literature, and in most countries they follow the English model of kicking science fiction out. Around the 1940s, 1950s, all this stuff winds up in its own bucket. But most of the models that we need to comprehend the world that we're in are well established in science fiction. And I think we need to bring science fiction in from the cold and consider it to be the literature of the age that we're in. Because there's no way as good as for getting your head around modern technology as reading science fiction from 30 years ago. It's an incredibly useful resource for figuring out what the deep story is, the deep structure of the reality we're in. And the book I recommend most often is called Shockwave Rider, which exactly asks this question about the rate of change, and is also a fantastic predictor of the internet.
So read more science fiction, basically. Also watch movies and yeah, go ahead and you'll be fine, basically. It's what I've been doing for 20 years and, well, look at me. Well, perhaps not the best recommendation, come to think of it. A question on the fifth row, please. And let us know perhaps who you are before you ask a question. Thank you.
Hi, I'm Ante. I just presented the KYC use case for Nordea. And I'm a PhD student in Switzerland. And my question was referring to the permissionless and permission-based systems, because you said that innovation is happening in the permissionless systems. And now relating to banking, if we look further, for instance, if we look at the IoT and machine-to-machine payments, those machine-to-machine payments can just work on protocol basis, so we can't use machine-to-machine payments in private blockchains, because in a bank, we have to see if this machine is a customer, or the KYC process for machines wouldn't work. This is why machine-to-machine payments, I would say, would only work on a permissionless system. And now we talked about changing business models as well. So to what extent have you thought about that one main pillar of banking, the payments domain, could be not one of the main domains for the banking industry in the future? And because those prototypes are maybe short-term goals, but looking at this perspective as payments could be something done by machines on a permissionless systems. So to what extent have you thought of those changing role of the bank, focusing on the financing or investing area, not on payments? Because we can see now that the margins for payments are also going down for banks already.
You're reading too much science fiction. No, I think when it comes to a digital, including a blockchains, there is an order in things, and there are certain breakthroughs we need to see before your vision becomes true. So, for instance, we have digital for customers and corporations and so on and so forth. We have digital for employees in a bank. Then we have a digital in connection with our partners in the larger ecosystem. And then we have digital for things. But before we come to the point where things can start to engage in contracts or make transactions without me or without human beings being involved, I think we need some more breakthroughs in payments systems, or the payment part of the discussion. We are talking billions of transactions in a very short time period. And our good old tried blockchains can simply not do that yet. Pardon?
But right now the banking system is also not able to cope with that. So it's small amounts of money, and transaction cost is way too high. So we think that some distributed, decentralized system will take place to cover this IoT M2M machine-to-machine payments, and it's certainly not our old SWIFT banking system, I guess.
Yes, but you had a comment?
Yeah, it was just a short reflection on the thing that you said before on how to cope with the massive amount of change going on, and you said the threats, you could say, against large businesses. Now I'm the only representative of the public sector. I could say we are also large businesses in our own way. And we deal with a lot of the same problems, you could say, as the private sector does, also in terms of complexity and business models, you could say, that belongs to, are rooted sometimes in the 1960s or so. And some of the things that we are working with in the tax administration is that we try to move forward, and I think that also applies to the private sector in a large part, in thinking in segmentation, decentralization, and decomplicating things, you could say, and not trying to cope with it all at once, but trying to break it down into, you could say, little pieces or relative little pieces. And of course also, and some of the guys that you have met from the Danish Tax Administration at this event represent, you could say, a small part of the organization sent out trying to understand what is going on around, you could say, the basic administration that we have to run, because we have to get, of course, the taxes in. Nevertheless, a lot of changes going on. So segmentation, decentralization, and decomplication are some of the you could say tendencies that we are working with right now, and trying to sort of break our business models and business understanding up in smaller pieces, you could say. So it's just a reflection on how to cope with messages.
I like that public sector here is doing this, especially decomplication. So in Germany, we're not that advanced in the public sector. You're right with your approach. For us as, let's say, strategy consultants, the question is, all those topics are interconnected and interdependent. And there are fewer and fewer people who understand those interdependencies, and I think we have one here. And I think it's very important to segment this and break it down to approachable topics and so on. But I think it's also very important to have some guys who oversee those parts and to move this, and this is what I'm talking about with a vision. So what is your company in 10 or 20 years doing, and what is your role? So our customers, they are not very good in let's say, envision a new role in a decentralized ecosystem or whatever it is, or and I think this is a capability we are short on. So you have to integrate this high-level view, but also understand the concepts, the technology concepts. And I think IT University here is a good example, and I like how you play together with the other universities. And this is a missing link of the next decade, I think, in terms of skill and capability. And yeah.
So we have time for one final question, if there's one for the audience. We have one right here, yes, and please wait for your microphone, sir.
Okay, so my question is, my name is Peter, or Piotr, right. So I strongly believe that actually developing blockchain cannot be done or realized in isolation, because it doesn't make sense. Of course, it might be a good first step just to understand what this technology or concept means, but in the long term, actually there is a strong need for collaboration and actually an engagement in the body. So my question is, do you have any tangible idea how to actually sit together and start discussing that in more practical way, how to get the benefit in long term? Otherwise, it might be so difficult to actually move forward.
Great question. Are you planning to, stay together and invite a few more people and talk about blockchain development together?
Yes,
Paul. We'll begin with the Paul.
Yeah. There are some steps, in my mind at least, from blockchain in isolation to a full system that spans the globe, so to speak. And I think blockchain will turn out, the technology side of blockchain will turn out to be the smallest part, a smaller part. A larger part will be the redesign of processes, finding out what is the governance, who does what, and then the features of blockchains probably will play together with other technologies, even on the technology side. And in the banking sector, we are still regulated. There are still many things around regulation, legal implications that are at present not resolved. And some of us are even ahead of the curve. Even regulators don't have the answers and are still trying to learn about this, as we are.
So, Morten, perhaps, are you also already dealing with other companies, dealing with Jesper and Paul, and perhaps talking to Stefan, trying to work out how all this might affect you all and how you might develop it together? Because, as the questioner mentioned, that might be a prerequisite.
Well, certainly, as I described before, we are conducting a real pilot with global trade, trying to apply blockchain technology to solve some of the authentication and security problems that global trade is faced with. But just to take an example of some of the challenges that we're dealing with and some of the barriers for this, and I absolutely agree with you, Paul. I don't really think that it's technology that is going to limit the diffusion of this. I talked about these 25 centimeters of paper. Now, everybody can understand that is not efficient, right? That is a problem. That is something that the world could live without. But in fact, those pieces of paper is a primary source of income for many public sector employees in Kenya. So taking away that piece of paper is not an easy process.
Shuffling paper is still the job. Jesper, perhaps final comments.
Just a great question, because that gives me the opportunity to thank ITU and CBS and the University of Copenhagen for this great event. Because in my opinion, this is exactly what we need to move forward. Cross-sectoral participation and trying to solve and explore some of these new technologies that private sector, public sector and universities and so forth work together and try to figure out what would we like our future society to look like and how would we like it to work and what kind of regulations do we need and so forth. That's the only way forward. So thank you very much for the event today.
I couldn't have said it better myself. Thank you to our panel. And now we have a couple of more presentations before the award ceremony. I was going to say the award show. I'm not quite sure if we have an orchestra playing and everything, but there'll be at least an award ceremony. But we have a couple of more presentations before then. And your presentation is ready? You're all ready?
Hopefully.
Fantastic. And that thing is on. Welcome, Jacob. You're going to be talking about blockchain and innovation.
Yeah, thank you.
Oh, please, a hand for our next speaker.
Hello, thank you for having me. I'm Jacob. I'll be standing here because the clicker does not work, so I have to physically do stuff. You don't know me, so I'm just going to briefly introduce who the hell am I. For the most of my life, I've focused around radical change. And one of the guys that inspired me at first, and now Vinay, he left, which is good, because that was this guy, Bill Gates, many years ago. He inspired me into what do we actually achieve when we take emerging technologies and build new businesses and introduce technologies to the consumer. And after meeting him, I figured I would spend a whole lot of years studying. So I finished my computer science degree from the University of Copenhagen as one of the few, which this cartoon illustrates. I have yet to achieve a job in the public sector. I have yet to achieve becoming an internet millionaire. I'm working on both of them. But before reaching that height of my career, I have consulted for many years. And finally, I figured out, hey, maybe I should do some of this on my own. So I co-founded a small consultancy called Unmade. And at Unmade, we focus on radical change, what others would call disruption, which we see as either a very narrow academic description of what something is, or a completely meaningless word because it means everything. So we like radical change instead, because that sort of is a word that encompasses more than just disruption by itself in the academic term. And we work with big companies that have big boats with big boxes on that move Nike shoes, and we also work with companies that transport people via train, and other companies that move money between people and companies. So trying to navigate this radical change going on. And we experienced our own radical change in January when we joined Implement Consulting Group to gain 500 new colleagues that can sort of give us an even more credible story in not just talking about radical change, but also actually implementing it. And now I've said radical change about 50 times, so let me just quickly define it. Now we're real consultants, so we made our own 2x2, and that involves looking into what does the market need, what kinds of new needs are out there that we have not yet discovered or not yet delivered upon, what kinds of societal changes will happen in the next 2, 3, 5, 10 years. Can we discover those and somehow prototype and validate whether we are moving in that direction or not? And what kinds of new technologies, including blockchain, are out there sort of leading the way on either radically changing the way we produce our products and services, or actually by themselves enabling entirely new products and services to be delivered. And then there's a really scary place, which is when it's the new market needs and new technologies, which is completely unknown. We probably don't start there, but that's what we help our clients move towards. And just to give you an illustration of that, what that would be Uber utilizing existing technology, but tapping into a societal trend of the sharing economy, of gaining trust in new ways, and actually have a social experience when I move from A to B. Or we have Tesla utilizing new technology to an existing need that we already know. And then there's a really, really interesting company like Local Motors who, for one, 3D prints cars. So now we can have fully customizable cars. You can also assemble them yourself if you want to. But a couple of weeks ago, they actually announced that one of the municipalities in Jutland will trial 3D printed buses that will be self-driving, enabling a more efficient workforce in collaboration with IBM Watson. And I see this is one of the spaces where there's something happening here that we can't really comprehend. We have to actually try it in real life to figure out what works. So, I work with what some call disruption, and I thought that was the most hyped word ever, until I realized that blockchain is even more hyped. And that's good to know. I learned something. And one of the reasons for that is a guy like this, Mark Andreessen. He definitely knows Bill Gates, because in the middle of the 90s, he was in the popular browser wars. Mark Andreessen co-founded Netscape, which was at war with Microsoft in terms of which browser would succeed, maybe introducing this line of innovation. But since then, he has become one of the most influential people in Silicon Valley. And when he states that blockchain is the most important invention since the internet itself, it's worth listening. But it's also worth just noting that he's a venture capitalist, that he invests in all things startups, especially blockchain-related startups, so he's obviously interested in some kind of hype around blockchain. And to some extent, you see that maybe we've crossed some kind of border, because then you see stuff like this, which might tend to think that, hey, maybe we are talking a bit too much about blockchain. And I think this quote, I really love this quote, that we tend to overestimate the effect of technology in the short term and underestimate in the long term. I think that's what's happening. And a better way of illustrating that is the Gartner hype cycle, which tries to research what are these emerging technologies, among many reports, but what are the emerging technologies, what's happening? And this is actually the latest emerging technologies hype cycle that was released a couple of weeks ago. It hasn't been shared on LinkedIn yet, apparently. It will. But this tries to sort of illustrate what they have seen for many, many years, that there's a pattern with new innovations, that we see expectations building because we have research that's interesting, we have proof of concepts, we have startups, we have market reasons, we have all sorts of things that enable the press to write new stuff that heightens expectations, and then suddenly we realize maybe the technology was not as mature as we thought, or the market need was not there, or at least it was not there yet. And we've talked a lot about hype, and this sort of illustrates where we are according to Gartner. We're actually sort of nearing the height of the hype. And hopefully what I see is from events like this and from just talking with industry experts, that we see also that some of this hype will be deflated. That we will actually sort of figure out, so yes, that was really interesting, now we see what it's actually about. And I think that's what we've actually been revolving around in many of the talks here, that there is a lot of interesting things, but are we really there yet? So, just to give you a quick one, do you even need blockchain? You can use this simple diagram and you're all done. I didn't do it, but I think it's really hands-on. I'd much rather talk about a guy that has actually experienced disruption. So this guy, he's smiling on this picture. I'm not sure he was smiling in the 2000s when he was the president of Kodak's digital business. And he actually wrote an article a couple of months ago on this topic. And just to sum it up, he said, we were not idiots. We saw it coming. We were actually pretty good at doing digital cameras. In some markets, we were actually leaders of that. We just couldn't cope with something called a smartphone. And we couldn't cope with something called our legacy business. We actually didn't know how to react. When should we jump ship on our existing business, and what should we do about it? So we had 4 key lessons that I'd just like to reiterate, because for me they're really interesting to ask yourself as a company, what are we looking into in the future? One is our core technology converging towards some kind of general purpose technology platform? I don't know if that could be a blockchain or something related to that. Is the technology that underpins our business likely to sort of lower barriers to entry when they move into a digital sphere? Do we have a capital intensive legacy business? Many companies do. The 3 companies that we have seen here do. And does this change also change the power of the people in the ecosystem? I think just asking yourself these 4 questions from a guy who actually experienced disruption is quite key. And if we were to have consulted Willy some years ago, we would perhaps have used this process that we use ourselves today, which is the people behind the hype cycle. They have defined a process themselves, and we are not in the game of reinventing the wheel, so we take what works. So we use this methodology to sort of navigate emerging technologies, blockchain being one of them. Blockchain being one of those that we have spent quite a while on during the past couple of years, getting to know it, becoming smarter, and failing as much as we can. So you start off with this process. They made a nice acronym, so it's easy to remember, STREET. And you start off scoping what are we looking into as a business. And you can scope that in many ways. You can scope it based on your purpose, on your aspirations, your vision, your mission, your why, your massively transformative purpose. There are many ways that you can look into this, but looking at how can we scope the future based on what we are as a company and what we aspire to is one way of looking at it. Another would be, where are we as a business? Are we trying to become the most efficient company in the world? Are we where we can actually create new markets? Or where are we? And unfortunately, what I see a lot of talk about, and that's just maybe because that's where we start, is that a lot of the blockchain-related projects and proof of concepts that we see are around efficiency, and not that much about creating entirely new markets based on what blockchain can enable. And I think actually the finance talk was quite interesting because the use case led into new kinds of markets for a bank. What are we actually delivering in the future? And it's okay with me if efficiency is what you do, as long as you use the money that you free up to something positive to create new markets, and not just distribute to your shareholders or other people. So, balancing what you aspire to as a company versus what your value is, versus the risk that you're willing to take as a company is key, because otherwise you'll be talking about things that look really interesting to you, but the risk profile of your company is that you really don't want to try out new things. So this guy, he's a first mover in my mind. He's sleeping in his autopiloted Tesla and would be a first mover company. But others would say, I'm not there yet, I need something that's more mature. And you need to balance those two things. When you've scoped, you need to track what kinds of emerging technologies are out there, what's happening. You do that by attending events like this. You do that by talking to partners. You do that by talking to your customers, to your suppliers, maybe even to your competitors. And then you track them, and you track them continually because it's not a static world. This is one of the reports that we tend to do. Try to visualize to other people, what is this all about? What's the level of maturity? And then you've sort of covered the technology axis. And then to cover the other axis of our 2x2, you need to look into the trends that are out there. What will happen in the future? So many years ago when Willy was there, not necessarily smiling or still smiling because he hadn't seen what was coming, there could have been something like the sharing economy, which is obvious today. But when you look in hindsight, you see an economy that is changing, new ways of gaining trust and so on. And this guy, one of the co-founders of Airbnb, really sort of coined it to me what sharing economy is. It's not just about enabling transactions between people, but it's actually creating a connection beyond the transaction. And I really like that term because it involves more than just Bitcoins from one place to another, or Ether, or what it might be. So now you tracked what's there. You need to rank it based on your scope because we can't do everything. As we talked about, there are so many things out here happening. How can we manage all of this? And a simple way to do that is you put all of this hype that you read and study and desk research and go to things, events and so on, you map them into a hype cycle. Where are we in levels of maturity? And just say, okay, so everything on the left is what we should be researching more about, and everything on the right, if we're not doing anything about it, then why aren't we? And a more advanced way of doing that is to say, as a company, how willing are we to invest in something and not know when we get something in return? When do we have to know when we get something in return? So there are 4 value gaps. There's something about the performance of the technology, reliability and so on. There's something about how can we integrate this into our organization. Is that feasible or not? Is there some kind of market penetration that we need before we can actually take on this future emerging technology? And what is the payback period? So now we've found out what was our scope. We tracked different things. We ranked them based on our risk profile and what we learned. So we have a couple of innovation candidates. Now we get to the fun part. We get to actually do stuff. So you get to evaluate things, and that involves thinking with your hands. That involves things like pre-to and or prototyping things. So after joining Implement, we went on a strategy tour to Berlin, where we had this case that we had a 3-hour design sprint on, where we said, hey, if this company in 15 to 20 years was not supposed to be living off selling petrol, what could that be then? I think it's a very concrete case that's pretty, you can point at the star over there and see that there's some kind of road towards that future. And then we prototyped a lot of things on cardboard. Implement is filled with cardboard, so we love cardboard. And then we went into the streets of Berlin to sort of just get an early understanding of, we made something crazy here. How does that sound in your eyes and ears? And That was really, apart from being a very fun experiment, it's also something where you begin to gain learning. Not by just sitting in a conference like this and me talking and someone else talking, but actually being with customers. In the end, those are the people that will use your product or service. And then there's something as this. I think the hackathon and the 3 companies that put forth business challenges are awesome for doing that, because that's one of the only ways that we learn. And I commend them for doing that. And then just in general, embracing what has been talked about for many years, the lean startup, build, measure, learn, as quickly as possibly move through this ladder of fits. So ensure that there was a customer problem that you can build upon with this emerging technology, that we can solve it with this emerging technology, that there's enough customers out there so it's not just one person, maybe the CEO, and ensuring that we can make money off it. And this is not a straight-through process where we just move up from 1 to 3. We move up and down, and ensure that we capture this in a format that is easily communicated to others. So now we have evaluated emerging technologies. They have touched, in one way or the other, customers, and we found out that some of them didn't work, but maybe we found one that did work. And now we have to look into, so we're not the ones that are building a new future. We're not building a new organization. We're not moving this into the existing organization ourselves. Others have to do that, because our role is to look into the future and figure out what works and what doesn't work. So we need to start evangelizing to the people that will adopt this from us, because otherwise we know so much that they don't know, and they will see us as being futurists with no real sense of understanding of the real world. So we try to use tools like, for instance, design fiction. You mentioned, Vinay, science fiction. This is another kind of fiction, but design fiction where we take everyday objects that all of us know, the IKEA catalog, for instance, and say, hey, let's put an emerging future into an IKEA catalog and pretend it's here today. And somehow, magically, this object that we all know about, when we see a future in it, represented there, it's sort of, hey, wait a minute, could I go into IKEA and this IoT-enabled shelf with a drone, just that tinkering, hey, could I actually go there today and buy it? Or no, that's probably not possible. But that sort of removes some of the barriers to adopting new technologies. And there are many other tools to evangelize. And then you need to transfer this, going from being the innovation leader to actually supporting those that will adopt your innovation. And in the end, this complex process to some, or at least there are many things, is illustrated like this. Read more in this book, which is quite old, but not really known. I can add some more complexity with some more lines. And just to finish up, what's important to me is, there's a saying, don't get ready, get started. Don't get ready, get started, which you could also put into terms like this, just fucking do it. Learn something by putting something into the real world, doing something by yourself in collaboration with others, but do more than just talk and read and stuff like that. And then maybe we can achieve something radical like this guy did when he redefined how to do things. And that to us inspires what are we up to. And that was it.
Thank you very much. Thank you. Very inspiring, although I didn't like the bit about just talking. As a radio guy, I mean, that's what I do, sorry. We have one final presentation for you today. It's going to touch upon one of the challenges that I believe Stefan brought up earlier today, namely the legal and regulatory challenges around Bitcoin, blockchain. So Joachim, welcome. Please let us know what to do about it.
Okay.
Welcome. Give Joachim a hand, please.
Okay. Yeah. Okay. Yes. Good afternoon. My name is Joachim Schrey. I'm a lawyer in Germany, a partner with a German law firm which is internationally active. It's called NER. We are one of the biggest law firms in Germany and in Europe. And when I started my career in 1990, if you talk about computers, you talked about mainframe solutions. If you talked about mobile phones, they were not really mobile. They were these suit cases, and they were only used by people who were rich or who pretended to be rich, since they cost more than 10,000 euros in today's currency, and and nobody talked about, with the exception of science fiction authors, talked about the modern technologies we use today. But the challenge for a lawyer is always to look at the current instrumentarium of the existing law and to transfer it into these new technological solutions. So no doubt blockchain technology is such a new, rapidly developing, somebody would say even disruptive technology. Whereas law, I think it's unavoidable, usually starts to think about such new technologies and on legal solutions for such new technologies once these new technologies are applied in commercial products or services. So please don't be disappointed if I cannot present you already ready-made legal solutions. But I will take the next 10 minutes around to show you how a lawyer would approach blockchain technology-based commercial products or solutions. So the point of entry is that we start to think about, are there any legal issues raised by the technology itself? And then, are there any legal issues raised by the business processes which were supported by these technologies? Let me give you an example, starting with what are the legal issues raised by a certain application based on blockchain. And take the simple and old-fashioned, nearly old-fashioned example of bitcoins. So if you look at the legal literature and what happened in the legal scene regarding bitcoins, then the first question was, are these cryptocurrencies, due to their character as based on a public ledger for currency transactions, are there currencies or similar financial instruments which are somehow regulated by banking law? Well, the German Federal Banking Supervisory Authority, that's their official name, the Bundesanstalt für Finanzdienstleistungsaufsicht, they said Bitcoins qualify as a financial instrument within the meaning of paragraph 1, subparagraph 11, first sentence, number 7 of the German Banking Act. Which means anybody who buys or sells bitcoins on its own name, but on third party's account, needs a banking license. So that's a really severe implication on any business model which is based on bitcoins. And any cryptocurrency exchange platforms are qualified by the BaFin as multilateral facilities within the meaning, and again, such a cue of a name of a legal provision in German banking law. So if you see these results, that may be your reaction. But as always, the opinion of the BaFin is only one opinion. And there are others in legal literature who says, no, bitcoins are no financial instruments, since there is a significant characteristic of a currency which Bitcoin doesn't have. And therefore, Bitcoin is no currency, and therefore all the different roles in such a Bitcoin-based system do not need a banking license. And maybe a good news for you, other European banking supervisory authorities in other countries do not share the opinion of BaFin, which doesn't make it easier, since if you want to establish a Europe-wide system, then you have to cope with all the different opinions and positions of different supervisory authorities, which doesn't make life easier. So BaFin's opinion in Germany is the opinion of the supervisory authority, and it may be opportune to follow their opinion. But as long as nobody disputes BaFin's opinion, so brings it to a court, their opinion will prevail. And finally, and that is also something which is important for everybody who thinks about blockchain-based solutions, the legislator is maybe sometimes in the future be challenged to change the applicable law. But that needs to the involvement of the people in the parliaments, in the ministries, at a very early stage in these new technology development, so that they are aware of what has to be changed in the applicable law. So what was mentioned before in the panel discussion, that we need an interdisciplinary approach to this new technology, I can even sign it. That's absolutely correct. And I'm quite sure that many people in the parliaments and in the ministries do not have a clue what is happening with blockchain technology and with new business models and challenges this will cause. And let me just give you spontaneously another example. We just saw the Know Your Customer solution, where a lot of banks are involved, and one bank can rely on the Know Your Customer certification or confirmation of all the others. What does it mean under regulatory law? Well, under regulatory law, since knowing your customer is one of the main tasks of a bank, the participation of many banks in this Know Your Customer vari-chain business model which we are presented means that all the participating banks outsource this material task to the other party, to the other banks, which means that regulatory law requires a contractual basis between all the participating banks where one outsources this task to the other. And as you never know who is the first in this chain, it must be a kind of ring outsourcing or ring outtasking. Well, contractually possible, maybe a little bit sophisticated or complicated, but contractually possible. And then we asked in the lunch break, well, why haven't banks not yet started to implement this business? My first reaction was, maybe typically for a lawyer, well, the reason may be liability. Yeah? If the first bank we saw in this presentation, if the first bank makes a mistake in verifying this customer, the other banks may come to this first bank and say, well, you made this mistake, and due to this mistake, we suffered losses in the business we did with this customer. And now we hold you liable for this. And of course, any new business, if a bank wants to start a new business, they would at first think about what additional liabilities may this new business bring about. And as this may cause additional liabilities, I assume that was the reason why banks did not yet enter into this new customer verification business. But this could also be solved if all the participating banks in this ring of verification partners, so to say, would agree contractually that they won't hold each other liable for at least slight negligence mistakes made in this verification process, so that a lot of these liability risks are taken away, and the additional liability which may remain is outweighed by the cost reductions each bank has when they participate in this vari-chain system. So you see from these business processes and from this business process approach that there is a lot of legal implications which have to be considered even when you set up these business models. And as blockchain, as Bitcoin is just one application, we also saw a lot of other possible applications, as was said, the change of pieces of land, the transaction with intellectual property rights, the transactions with cars, with utilities, and so on and so forth. And with all these different fields of business, we always have to look, what is the existing law, what are the existing administrative and governmental authorities which may be involved in this, and to which extent the existing law has to be changed. I just talked in the break with Mats Tofte about the land register, where he thought, well, that's already implemented in Denmark, an electronic land register. I said, yes, we have the same in Germany. But if you want to sell a piece of land to another, to a buyer, then you need a notarized deed. And a notarized deed means really old stuff, ink on paper, handwritten signatures, and a notary who is reading the whole agreement, which is a time-consuming exercise. And Mats told me, well, that's different in Denmark. We already can sell pieces of land fully electronically. Well, congratulations to Denmark, but in Germany this would require a tremendous change in not only in one piece of law, but in different pieces of law, and it would be a tremendous change in the whole legal system, so to say. So it has to be considered at a very early stage when you develop blockchain applications. So let's just go to the other level. What kind of legal issues may arise from the technology? Well, as always, when lawyers start to think about legal problems, they start with definitions, and therefore I look to the definition of what is blockchain technology. And one of the characterizing elements was that each block holding batches of an individual transaction, if part of these batches on an individual transaction is or can be the public key of one of the participants of this transaction, it might be that the information that this person was partner to such a transaction is a personal data within the meaning of the EU data protection regulation, or in 2 years' time, the EU data protection regulation. That means if such a block is really a personal data, then we have to cope with the problem that the collection, storage, and processing of personal data is generally forbidden unless you have a legal provision which allows this or even prescribes this, or the individual has given his prior consent. And at least under the German data protection law, consent means, in the first instance, a written consent, and when a lawyer says written, then he means it literally, again, ink on paper with a handwritten signature. Or, Germany is not in the Middle Age, so you can also give the consent electronically, but this requires a very sophisticated consent management system, electronic consent management system. So everybody who has given his consent has to have the chance to read it again, to withdraw his consent, and so on and so forth. So it needs some, let's say, data management and data processing infrastructure behind it. And it won't become better if the European data protection regulation will come into force. So what does it mean? If you have let's say this car transaction, which we saw in one of the use cases there, if we have this car transaction, well, as long as the car transaction has not yet been completely fulfilled, you have this purchase contract or lease contract, whatever you have for this car transaction, as the legal legitimization that these personal data are processed and stored. But as soon as the car transaction is completed, so the one guy has received the car and the seller has received the money, then the agreement, the purchase agreement, is completely fulfilled, and it is no longer a basis for keeping these data stored. Let's say it's still a basis for keeping these data stored for the warranty period or something like that, but that's a quite short period, and then the legal legitimization is away. So what is necessary to avoid that you collect the consent of all these people, since that's the more sophisticated and time and cost-consuming procedure? Well, you have to change the purpose of this car transaction. If you not only say, well, the purpose of this car transaction is to sell the car, to transfer title in the car from one person to the other, and to transfer title in the money from one person to the other, but you also say, well, part of this transaction is that it forms one element in the chain of the authenticated process of changes of ownership in this car. Then you have an extended purpose of the agreement, which can form then the extended basis for keeping these personal data stored. Yeah? So that this example shows that you have to be a little bit innovative, legally innovative, even lawyers can be innovative, legally innovative when you structure the business model based on these blockchain technologies to cope with it. And I think that is what I wanted to say, that we have always these two-level approach, business process-wise and technology-wise, and that it is necessary to involve lawyers at a very early stage, even when you draft the business processes, before you transfer them in technology. Otherwise, it will become very difficult to get really legally bulletproof business solutions. Thank you very much.
Thank you. Thank you very much, Joachim. That was very enlightening and also very confusing, at least for me. So I guess I shouldn't become a lawyer then, or perhaps I should. Thank you. That's always nice to know. If you'll forgive me, before we go to the awards, I was just trying to think of a sci-fi/fantasy-inspired thought to leave you all with. So I came up with, and so forgive me in advance, but I came up with one block to rule them all, one hash to find them, one chain to bring them all, and in the darkness bind them. So there you go, that was my 5 cents, thank you. And now, I think for the thing many of you have been waiting for, namely the awards. And Roman, I believe you will do the honors.
Indeed.
Have you got a microphone for you?
Here we go.
Yes, we
perfect.
do.
Yeah.
There you
Does it?
go. If you appreciate it, yes. Is it green?
It will light up if it's on.
There you go.
Perfect. Thanks a lot. I think that was an extremely rewarding and an insightful day, and for me it was an extremely kind of insightful week. I like to think of that we are all winners, and we gained a lot of information. However, there is only one winner tonight who is going to have a nice trophy, Danish design, of course, which we will give away to the winning team. And luckily we organized and bought enough of these trophies. It was kind of an interesting process actually to see how many people participated in this online voting thing. And well, without further, this is not the Eurovision Song Contest, I'm not calling anybody. The winning team is the finance team. Please come forward. sensitive to touches, so it's kind of like your iPad. I realized maybe you should wear gloves. Thank you very much. That was really kind of an insightful and super experience with all of us, right? But let's give them a big hand for their great job. Especially if you keep in mind they had only 24 hours and they haven't seen the use case before. So that was really amazing. This concludes our day. We are a bit over time. I'm apologizing for that, but I hope you nevertheless think this was an interesting day for you as well. I think we should continue this kind of collaboration. I hope we can continue this kind of collaboration. It is important to bring different experts from the legal field, from different industries together. I'm really happy also to see that kind of the public sector is super innovative here in Denmark. We should kind of continue this momentum, working together and making the future a bright one. Thank you very much for coming, and I hope I see you again soon.